is up, chat? It is your boy Cedrix here with another stream, which will be converted into a video. This one's gonna be going on Cedrix Cashflow. If you guys are watching afterwards, make sure to hit that subscribe button and also go ahead and follow my kick because I will be live streaming every single day. Main mission is going to be stacking assets and learning skills. Side mission bankroll is also going to be live streamed on Kick, as well as my workout, whether that's hitting the weights or sports, soccer, basketball, boxing, this, that, and the other. I'm in Vegas, finally. I've been waiting for this moment for a while. Unfortunately, I did not get the mail that I was expecting, so we are still waiting on that so we can be out of zero. Yes, we're still starting from $0 from scratch, but that's a part of the struggle. I guess maybe it's a good thing that I came with nothing, so I'm enjoying more time with my family instead of stressing about money. Although yesterday, me and my brother were actually collaborating for a while, figuring out what we wanted to do, how we were gonna stack up some money with side hustles. We were thinking of stacking up money from side hustles so that we can learn and start our trading journey. So that's actually what we're gonna be doing today. Woo, Soul Star. What's up? How you doing, Devin? Damn, that's a W in the chat right there. So we're gonna be learning from TJR how to trade. First thing we're gonna be watching is going to be this 5-hour video right here. We have watched a little bit of it. I'll skip through what I've already seen, but we are going to be taking some notes. Gotta stay on top of it, learn as much as possible. We're heading back to school without actually going back to school. But also let me pull up chat. I gotta pull up chat. Keep this shit up, gang. Only up from here. I appreciate it, dog. It is only up from here. There's really nowhere else to go. I appreciate that, bro. Hey, I hope everything goes good with your first drop. That shit looked hard as heck, bro. I really wish I could have stopped by for this shirt. Make sure to save that for me. I'll be back in Cali in a month or so. I need that shirt. But yeah, let's go ahead. Hold on, let me promote this real quick. I'll go ahead and start off the video.
If you guys have ever wondered how you guys are going to end up making generational wealth, or just stop living paycheck to paycheck, worrying about rent that's due in a month or a week from now, and you guys know for a fact that in 2025, the digital age, the internet age of internet money, where you see 17, 18, 22-year-olds making millions a month, and you're thinking, how can I get in on this? You've tried multiple different side hustles. You guys have attempted something for a month, and then you guys stopped. You guys have tried something for a week, and then you're like, this is too hard. I don't want to do it anymore. And trust me, I've been there before. I've gone through all the side hustles, so I understand where you guys are at. But don't worry, because I've gone through all of the BS that you guys have gone through, and if I was able to make it out, I know for a fact that I can help you guys make it out with just this video today. So with that being said, let me guide you. Let me hopefully grab your hand and show you the way that you guys can actually make a shit ton of money in 2025. Now, let me give you guys a little backstory of where I was at before you guys knew me for who I am. TJR trade, TJR, okay? Regular people in my life don't even call me TJR. They call me Tyler. And by the end of this video, you guys are going to be able to call me Tyler because we're gonna know each other pretty freaking well. Okay, so let me give you guys some perspective of where I was at before all of this online money thing was real for me. So I started off in crypto in high school, okay? And I got into it. I got really freaking lucky. I made a bunch of money, but then I lost it all. And that sparked this huge, crazy fascination with making money. And it didn't just jump from that just straight into trading and then boom, the billionaire. Like, no, that's not how it worked, okay? I went from that to reselling shoes. Like, I bought multiple sneaker bots and I was reselling Yeezys. I had a whole bunch of Yeezys coming to the house. I had a Supreme bot. I literally would, on every single Thursday, because I was on PST, okay, I can't remember what time the Supreme drops happened at, but I remember skipping the first 15 minutes of my first period class on Thursday so I could cook on the Supreme drop. And I remember the North Face Supreme collab dropped and I cooked on like these 3 hoodies and I was like, no way, I'm freaking rich. And then I wasn't rich because I ended up losing a bunch of money on several other drops. So trust me, I have been through a whole bunch of these different side hustles and things until I found what worked for me. I mean, I even thought about doing Section 8 housing. I thought about doing real estate. I tried doing drop shipping for like 2 seconds. I tried doing the Snapchat creator method. I actually made $3,000 doing that, which was pretty cool, but it wasn't actual sustainable money that could literally be consistent income on a monthly basis. And then after all of that, I was like, wait, I already made a bunch of money with crypto. Why? And like, I just got sucked back into the space. There was something that was so fascinating about it to me. So I was like, okay, I'm going to get back into this. I want to start learning about this some more. So what do? I just start watching YouTube videos. I'm going down the rabbit hole. I was literally watching a YouTube video that is pretty much the exact same type of YouTube video that you're watching right now of me. It's weird because I'm explaining the YouTube video that I was watching and you guys are now watching that same exact YouTube video where it was like literally 2 hours long and it's like, hello, this is the beginner guide to day trading and this is one pair and then you buy low and then you sell high and boom, you're making money. Okay, we're going to get way more advanced than that. I'm going to actually make sure you guys are taken care of because after that 2-hour video, I was like, bro, I still don't know how to trade and you honestly just left me with a whole bunch of information that now I don't know what to do with. So I'm not going to do that to you guys. I'm going to make this way easier than what I had to do. What I had to do is I had to put in a whole bunch of time, a whole bunch of effort sorting through all these YouTube videos, trying to figure out what works, what doesn't. And now I'm going to lay this all out for you guys so you guys don't have to sort through all those BS YouTube videos and you guys can just watch one single YouTube video where I teach you everything about trading. I even teach you the strategy about trading and you guys won't have to watch literally anything else. It's gonna be awesome, okay? Now, before we get into just day trading A to Z and we start talking about all of this educational stuff, I want to give you guys the option to compare and contrast some of these other online making money methods in 2025. Okay, so there's a whole bunch of different ways that lots of people are like, oh yeah, let me start this side hustle, and then once the side hustle starts making me more money than my real job, then I'm able to quit my real job and then boom, billionaire, right? So that's what everybody wants, but it's not as simple as that, and it's not as simple as trading, okay, and it's not as simple as drop shipping. Regardless, these side hustles are going to take time and effort. However, some of them are going to take more time, more effort, and most of all, a whole bunch of money to get started. So I want to break down these side hustles just in case trading might not be for you, okay? If trading isn't for you, that's fine. I just saved you literally like however long this video is, like fucking 5 hours. I just saved you 5 hours worth of your time. But if you do think trading is for you and we go over all these other side hustles so we can actually like confirm like, okay, we're not going to play these games on dropshipping, okay, Alibaba Express. We're not doing that shit today, okay? We're just learning about day trading and we're sticking to that, all right? So let's think about it. E-commerce, okay? Whole bunch of money up front. And I'm assuming the majority of you guys, again, like we said, we're living paycheck to paycheck. We're freaking broke right now. We do not have a whole bunch of money to be starting a brand new business, a brand new freaking brand, okay? A company. We don't have the money to be doing that yet. Why? It's a bunch of upfront costs and it's low margins. Like regardless of when you start and how you scale, it's upfront costs and low margins. Just no matter what, you're paying a whole bunch of money regardless of if you're low capital or high capital, you're still going to be paying a lot of money and you're still going to have low margins to start. Ever heard of affiliate marketing? Yeah, neither have I, and it's for a good freaking reason. You ever heard of a millionaire that's an affiliate marketer? I haven't. Get out of here. Copywriting. Bro, the amount of DMs, I'm rich and famous, or I mean, I think I'm a little bit famous, but the amount of people that I get in my DMs that say, hey, I'm a copywriter, do you need me? Bro, no, I don't. So if that answers your question on if you think becoming a copywriter, I'm somebody that would be considered like a very high ticket client for a copywriter, right? Do I use a copywriter? No. Do any of my friends that are rich and famous use copywriters? No. So do I think copywriting is for you? Trading infinitely scalable because the only thing that you're limited by is your capital. And luckily, there's a whole bunch of companies out there in the world that can help us leverage the small amount of capital that we have right now to be able to trade with higher capital. And I'll get into that later in this video. 25, baby. And with that being said, let's learn how to fucking day trade in 2025, baby.
Papá, ¿no quieres comerme luego?
No, gracias. Más al rato.
¿Al rato? Oh, okay.
There are around 30 different types of trading, okay? I'm going going to teach you guys the most common, which is day trading, okay? Which means we are entering into trades within the same day and we are exiting trades within the same day, okay? There's a whole bunch of different types of trading. There's technical trading, there's momentum trading, there's algorithmic trading, there's swing trading, there's fundamental trading. There's a whole bunch of different types of trading, but honestly, those never worked out for me. I attempted some of them, and most of all, they're just way more confusing than just the regular, most common form of day trading, which is getting in and getting out within the same day, and then what? Trading bankroll. So for everybody that doesn't know anything about day trading, don't worry, I'm going to break it down. Ready? On the chart, when it's low, you want to buy it, and then when it goes high, you want to sell it. Boom, you're rich. Thank you guys for watching. I'm kidding.
Simple as that.
Okay,
That's all
but on top of that, the nice thing about day trading, I feel like a lot of people don't understand this. They're like, what happens if the market goes down? You can't trade that day. Well, yes, you can. That's actually called a short position. So you can actually sell when it's up high and then buy those shares back for a lesser price, and you can actually still make money doing that. So there's two different types of positions that we can take. We can take a buy position, or we can take a sell position. Pretty cool. So that's another nice thing about day trading, and that's why I said I want to stay away from crypto, because crypto, most of the time, you're only making money buying for the most part, unless you're doing leverage trading, blah, 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 blah. We don't want to talk about that. But for day trading, for us, we have accessibility on both sides. So that's why day trading is such a high leverage skill, because not only can we buy low, sell high, we can sell high and then buy back lower and make money in either direction of the market. So let's say the market crashes. Housing crash, 2008. What happens? What happens if the price goes down? Well, you can still make money. And that's why day trading is the highest leverage skill that you guys can have, because when everybody's panicking, financial crisis, we're still getting rich. Now, I want to break down, because again, this is like bare minimum base level of trading expertise required here. Like, just how do you make money from trading? And I know I explained like you buy low and you sell high, but I'm going to do a little high school teacher here for you. Play the economics teacher in high school. I'm going to teach you guys about the stock market, okay? Let's say little Timmy, I am Timmy, wants to buy 1 share of Apple. I don't even know how much a share of Apple is, but let's say it's worth $100 just for simplicity's sake, okay? I go to my little brokerage on my phone and I say, click, buy 1 share of Apple. Back in the olden days, and the reason why I have to explain this back in the olden days is because this is still how our system works. It's just digitalized and it's simplified for us, which is better for us because we're able to do these transactions super fast. But back in the day, when you wanted to buy a share of Apple, you would have to make several different phone calls to like the brokerage, to the New York Stock Exchange, whatever. And then they would ship in the mail like your actual freaking paper share, and then it's like, boom, I have my share, and then you would have to like call in every day or whatever, however many days that you own that share, and you're like, hey, has price gone up yet? Or, oh no, is my share worth less money? Like, what do I do? That's how it worked in the olden days, okay? You would get this piece of paper and it would say like, boom, you own 1 share of Apple, all right? And your share is worth a certain price, and price fluctuates on a whole bunch of different things, okay? It fluctuates based off of news, it fluctuates based off of price action, which is what I'm going to be teaching you guys how to read. And when you wanted to sell, ideally you're selling for a higher price. So let's say me, little Timmy, calls his little brokerage and says, hey, I want to buy a share of Apple for $100. Obviously, I can't just name my price, but let's say Apple's share price is worth $100 today. Then, following that, 2 months later, whatever, the most crazy news in the entire world about Apple, Apple drops a time machine, and boom, 2 months later, Apple's stock is now worth 3 times more than what I bought it at. So it's now worth $300. Then I call up my brokerage and say, hey, I want to sell my share. Boom, we sell the share. What do I make? $200. Awesome. Lit, right? We can do the same thing, but now it's digitalized on our phones. So instead of calling a bunch of phone numbers, we just have these brokerages and these exchanges within our phone that can connect to super cool applications like TradingView, which I'm going to teach you guys how to set up. I'm going to teach you guys how to figure out what brokerage to sign up with. Okay, I'm going to teach you guys what trading platforms you guys can sign up with. So we can do these transactions at the speed of freaking light, okay? At the speed of tapping a button. And the nice thing about that is we're able to get in and get out with precision. So we're not waiting for our brokerage to get off the line and say like, boom, you sold, and then like, oh, price drops a little bit. Oh, damn, I made less money. No, we're getting in and we're getting out with the tap of a button. And that's why day trading is so great now, because we're doing it on our phones. And the age of technology is just taking us so much farther, and that's why it's so much easier to make money online. But I know that sounds super crazy, and I know that sounds like you got to be some freaking genius, but look at me. I'm a retard. And I make a shit ton of money from trading on a day-to-day basis, and on a monthly basis, and on a yearly basis. So if a retard can do it, sorry for using the hard R, you can do it too. And I'm sure the majority of you guys are smarter than me, so I'm sure the majority of you guys will be able to get really good at this, and probably better than me in the future, which is awesome. This is why I do this shit. So you guys can be just like me, except not retarded. It's awesome. It's great. So don't get overwhelmed. I know brokerage, exchange, tapping buttons, buy low, sell high. Okay, I know it seems overwhelming, but I'm going to cover all that in this video, and how you guys can do it, boom, just like.
All right, before we go any further, let me let you guys know what experience I have. So for those of you that don't know me, you guys should, but my name is Cedrix. I've been doing content since 2020, and that is also the year that I graduated high school. It was COVID year, and I started tapping into the stock market once I started making my first little, amount of income. At first, I was just like everybody else. I would invest my money and look at it every second. Little did I know, I was actually trading at some point with Robinhood, and if you guys don't know, you have to have a certain amount of money before you can make unlimited trades, or else you can only make 3-day trades in a day or something like that. So when I was investing, it was around the same time where all that AMC stuff was happening, GME, GameStop was happening. It was the whole bullish run, and me being dumb and a sheep, I was following everybody else. The market was going down. I was getting scared, and I saw my money go down. So then I started selling, because I was like, no way, I thought it was gonna go up. Little did I know, if I would have waited a couple weeks, maybe a couple days, I would have made tens of thousands of dollars. Yeah, bro, I literally did the math after I saw how much it went up. It hurt, and I did not learn from my mistake initially, just because I had that FOMO. I had that fear of missing out, but I also had the fear of losing my money, which, for those of you that don't know, don't ever trade or gamble money that you are not willing to lose. Obviously, Then I started learning a little bit more about crypto along stocks, and I started investing into Dogecoin. Now, once again, same fucking shit, especially this last time. Bro, this last month I checked Dogecoin, it was at 26 cents. I was buying that shit when it was at 5 cents, 3 cents. Bro, you know how much money I would have right now? Now, I've had my ins and outs in the market. I've had my time off, and being in the market always helps, because you're keeping up to date. Once you're out of the market, you're out of the loop. You gotta come back into the loop, which is basically what I'm doing right now. I'm knowledgeable on stocks and the stock market, but I'm not too knowledgeable on the graphs with trading. I want to learn the patterns, and I want to be able to know what's going to happen, or at least have a better percentage of me succeeding than just randomly putting my money into stocks, hoping that it goes up or down, and then selling. My main goal with trading is obviously going to build wealth. I'm going to try to get funded on a trading account, which I will also be documenting live. And also, with the money I do make, given that I make money from this, I will be investing for the long term. So the long term is different because obviously you're holding even though you know it goes down. Trading, if it goes down, you can still make money because you basically go against the market by betting. By you basically put a trade. You know what?
Like
this
this,
is why we're
start
watching.
today. Start learning the skill of day trading that is
Give you guys a
the
little bit
highest
of
leverage skill
of the knowledge I have.
So with that being said, we'll get into the 3 best tools that you guys need to start your day trading career, and I'll go over all the websites, all the apps that you guys need to download so you guys can get started. All right, let's get into it. The very first and quite possibly the most important tool that you guys are going to be using in day trading is called TradingView. This is where you guys are going to be seeing all your charts, how to buy low and sell high. Okay, this is where you guys are going to be using your strategy. Yes, there is a strategy with day trading, and don't worry, I'm going to teach you a strategy once we get all these tools figured out and set up for you guys, because we need to set those up first. So the first tool is going to be TradingView. Not only do they have an app on your phone, but they also have the website on the computer. If you guys are on your phone, I highly recommend you guys download their app and don't use the website. If you guys are on a computer, I don't think they have an app for the computer, but they just have their website. I use Chrome and it's perfect. So what you guys are going to do, I know we have whatever. We got Roger freaking Federer.
I just realized I'm blocking this guy. I'm blocking this guy. Let me put it up here. We gotta put it up here.
With Mount Rushmore on the back. I couldn't tell you why we got this shit going on right now. Who even is this dude? But we're getting started by staring at him, okay? So what are we gonna do? Get started for free. That's another great thing about TradingView. You guys, again, I told you guys no upfront costs, okay? There's not many upfront costs. You guys can literally start learning the skill of day trading for free ski. That's why trading is bankroll. Okay, so you guys are going to go ahead and click get started for free. From there, it's going to say, oh, free until you're ready? Bet $0 forever. What is that? Talk about bankroll, talk about saving money. We're not drop shipping to Alibaba, okay? We're not going to China and we're not using the Shane factory. We're just using the computers that they made, okay? That's it. That's the only sort of child. Okay, that's it. We're done. Okay, continuing, sign up. It's going to end up, once you guys sign in, whether you're using your Gmail, whatever account you guys want, it's going to bring you guys to a screen like this and say, buy my course, okay? No, we're not going to do that, okay? We're going to just fully avoid that. We're going to go over to marketing. Jumping ahead. Stop jumping ahead. We're not. Boom. Yeah. Charts. Buy low, sell high. No, not yet, Timmy. We're not there yet. God, man. Why you always jumping ahead? Stop jumping ahead. Okay. So this is indexes. We see the S&P 500. We see the NASDAQ smoking on that gas pack, smoking off your ass crack. Okay, we have the Dow Jones, okay, whatever. And then we got, look, foreign exchange. We got Euro, USD, GBP, USD, USD, JPY. I'm going to be explaining how all of these pairs work later on, okay? So I know this all seems overwhelming. What I'm going to do is I'm going to go ahead and click on the S&P 500. And then you're still saying, wait, where's the chart? Is it this thing down here? TJR, how am I supposed to read this? No, Timmy. We're clicking C on super charts. Superman, super charts, super farts. Let's get into this. Bang, look at that, okay? Your chart isn't going to look as sexy as this because I've already custom designed my chart to look really freaking good, okay? You guys don't have that luxury just yet. But what I am going to do is show you guys how you guys can make your chart look just like mine with these beautiful blue and black candles. If you guys aren't discriminatory to candle color, that's fine. What you guys are going to do is you guys are going to go ahead and right click on the chart, and then you guys are going to scroll down to settings, and then you guys can set it up with whatever colors, okay? You guys can do red, you guys can do green, you guys can do yellow, you know? You guys can do fucking black on black, you know? Hey, bruh, if you like that, you like that. You can do white on black, get a little light skin in there, okay? You guys can do that however you guys like, okay? These are my chart settings. Most of the time, your chart is going to look pretty freaking disgusting at the start, and it's going to be like green, red. There's going to be a whole bunch of BS in the background. Okay, so let me go through here. I'm pretty sure this is somewhat important. We have like the previous day close that we want to hide. So I'll just go ahead and you guys can copy this. You guys can change it however you guys want. Just make it look pretty, okay? That's one of the things that I value the most about my charts is like, First and foremost, I want my charts to be clean. If my chart isn't clean, and you guys will understand as you guys get better at trading, and as we get deeper into this video, you guys are going to be like, wow, how does he keep his chart like clean and tidy, whatever, because it can get really overwhelming. So let's go into Canvas. I have just background, solid white grid lines, no grid lines. Sometimes like, look, it has these like nasty ass grid lines. I don't like the grid lines. Crosshair is just boom, straight up. And then trading alerts and events, you guys don't have to care about that. So boom, once you guys have your charts looking nice and sexy, we are going to actually put a pin in TradingView for now. Now that we have TradingView set up, we're going to put a pin in it, and I'm going to explain these little candlesticks are, how to read them, what they mean, okay, and I'm going to be explaining these foreign exchange pairs. I'm going to be explaining commodities, gold. I'll even explain crypto for a little bit, okay, and we're going to understand what all this means, how we can read it, how we can actually make money from this market. But in order for us to make money, we actually have to be set up with a brokerage where we can deposit money, where we can withdraw money, and where we can actually execute these trades. Because on TradingView, we're not doing any of that. This is just where we're just marking shit up. Okay, we need a brokerage. Again, remember, little Timmy, he calls his brokerage and he says, hey, can I buy the shares? This is how we're going to be buying and selling and buying, okay? So with that being said, let's jump over to how to find a brokerage, how to get set up on a trading platform. Because this is our chart work platform. I'm going to show you guys how you guys can get set up on a trading platform. All right, so there's a plethora, like literally millions of different brokerages that you guys can go through in order to start trading and start trading on their platform, start trading on their apps on your phone, start trading on the apps on their apps on your computer. Okay, it really just depends on what suits you best, okay, and what platform or what brokerage you think best suits you. Okay, so I personally don't trade options. So options is out of the park for me. If you guys came here to learn about options, bye-bye, okay? I'm not going to teach you guys about options in here, but I am going to teach you guys a really solid strategy on how to actually make money in trading. So if you guys want to apply that to options, by all means, but I'm not going to teach you guys how to set up an options trading account, okay? I'm going to be teaching you guys how to actually get started with just day trading, okay? Using leverage on your own capital just through the account, not like leveraging specific positions, okay? So the brokerage that I use is HeroFX. That's the one that works the best for me, okay? I trade indexes and then occasionally I'll trade foreign exchange. So that's what works best for me. Sometimes these futures brokerages have really strict regulations on the type of leverage that you guys can use. And especially if you guys are lower capital individuals and you guys are just getting started into day trading, these big brokerages like Trade Evade and TradeStation, you just straight up won't be able to trade on them because you guys don't have enough money to trade with them. So instead, you guys would go over to a CFD brokerage such as HeroFX, where you guys can leverage your money more and be able to actually start trading with less money. Again, you guys can literally just type in trading brokerage, look through like a whole bunch of all of these different brokerages, find out what works best for you. Me personally, I use HeroFX. They're great. I can deposit, I can withdraw within like seconds, and it works great for me. So with that being said, I'm going to go onto the HeroFX dashboard and show you guys how to get set up on there. Again, if you guys want to go through a different brokerage, that's completely fine. I'm just not really going to go over that. Okay, so with that being said, let's jump onto HeroFX's website. Also, I'll leave a little link in the description.
Okay.
¿Quieres prender eso?
Sí, ¿no se prende?
Debe de prenderse. O sea, que no tenga batería. Ay, no sé, Luis, ¿qué fue lo que hizo? ¿No puedes quitarle esta a ver si tiene batería? Aquí sí está fresco.
Ajá.
Bueno. Aquí está. Ha de servir la web. ¿Estará bien puesta?
Sí. Está bien, más al rato lo digo.
No tiene nada, no tiene mecate, ¿verdad?
No.
Mándale un mensaje.
Ok.
Ok, el Milo se va a quedar ahí adentro en la casa, ¿ok? Y das una vueltecita, papá.
Okay.
Okay, bye.
Description. I have a little affiliate with them. So if you guys want to sign up with HeroFX, and if you guys appreciate all the info that I've been giving with you guys, it would be a huge support if you guys just signed up with my link right underneath here in the description. And yeah, they're super solid brokers for me. I trade on them consistently and have been trading with them for a while. So let's get into it. So once you guys go through that link, it'll have you guys sign up and whatever, and it's going to take you guys to a page that looks like this. And this is all the different trading platforms. This is also why I love HeroFX, is because they literally give you a like multiple different types of apps, websites, and different trading platforms to trade on, versus other, again, big brokerages. They don't give you guys any sort of variety. They're like, hey, you have to use this one specific platform. And it's like, what if that platform sucks? Luckily, HeroFX gives you literally so many options, okay? Me personally, I use TradeLocker, and I like trading on the app. So again, you would just go on your phone. You can literally just look up TradeLocker in the App Store and then go ahead and download that. And then they will give you guys an email once you guys have signed up, your account details and your password. As you guys can see, I have $35,000 just sitting in my wallet balance right now. This is going to be useful because I can either deposit this back into a live account, because this is just sitting on my dashboard wallet, okay? It's not in my trading account and it's not in my bank account yet. So this is just the in-between. This is why a broker like HeroFX is super useful, because again, they have different withdrawal methods, okay? You can withdraw in crypto, you can do like bank transfer, just a whole bunch of methods, and it's great. And especially for me, I love crypto and I like investing in it. So when I withdraw, most of the time I just do it through crypto and it hits in literally seconds. So for me, I do it through the TradeLocker app. They will send you guys a little email with your account username, with your account password, and you guys just go onto the app, you guys plug in your username and password, and it's locked in from there. Again, they have a whole bunch of different trading platforms that you guys can use. If you guys are on PC or laptop, whatever, you guys can do the web trader, which is, it brings up a little tab where you guys can trade on TradeLocker there. And if you guys want to trade on desktop, there's literally like a full-on app called TradeLocker that you guys can download, and then it's the same login process. They're going to send you guys an email. You guys are going to get your username and password. You guys are going on the talking about brokerages. Not only is a brokerage super useful for us to be able to deposit and withdraw money, right? That's our end goal with day trading, is to what? Bankroll, right? But before we can even get started with the bankroll, we need to learn the skill of day trading, right? How are we going to learn the skill of day trading? Like, we don't want to just throw money into the pit off rip. We don't want to do that. And again, like a lot of people,
why not?
People online and on YouTube will be like, hey, use my affiliate link, sign up to my brokerage, deposit $10 billion so I can reap the rewards of you guys losing money. We're not doing that, okay? I'm going to be completely open and honest with you guys. Okay, first of all, you guys can use this brokerage, or you guys don't need to, okay? Use whatever fucking brokerage works, okay? For you, whatever. I don't give a shit. What I am going to tell you guys is, before you guys jump on a live account with real deal, real spiel money, don't do that. And we're going to learn the skill of trading first, which is through what? Demo accounts. So we're not going to be using real money. We're going to be using paper money, okay? And demo accounts are by far, this is why trading is such a high, man, I love trading so much, bro. Trading, okay, trading is so good. This is why trading is so fucking good, bro. Drop shipping, how do you have to learn? You have to spend money, you have to make mistakes, you lose money. Day trading, how do you learn? You spend money? No, you don't have to spend money. You can use fake money, paper money, demo account money, and learn the skill while you suck. Because all of you guys are gonna watch through this video, and then you guys are gonna be like, here we go on my road to $1 million. And then you guys are gonna start trading, and you're gonna be like, holy shit, this is way harder than I thought. But don't worry, I'm willing to put in that work, because you know why? Trading, bankroll, right? We already know that. But the awesome thing about trading, we can trade with fake money. So we can literally learn the skill that is eventually going to make us money without losing money in the first place. We can learn the highest leverage skill in the world without putting money up front. Do you know how difficult that is in other fields? It's literally impossible in other fields. It's actually genuinely impossible. Every other side hustle, you have to put money up front, and then boom. Most of the times, the money that you put up front, you get fucking washed, and then it's like, well, you were just paying for that lesson. This, you're not paying for no lessons. You learn the lessons on fake money, on demo accounts. So I'm going to show you guys how you guys can set up a demo account on HeroFX and then start trading on that, because you guys aren't gonna be putting 35 fucking racks into a live account, okay, and then just saying, yeah, let me see if this works. Fuck no, we're not gonna do that, okay? I do not want you guys to do that. I want what's best for you guys.
Thank
and trust
you,
me,
TJR. I
felt,
appreciate that.
Bro,
That's
the beginner trading video that I watched was like, literally was exactly what I told you guys. Like, sign up with this brokerage, deposit $1,000, and you're going to be rich. And I did that. Guess what happened to that 1,000 within the day? $0 remaining, okay? And that was literally all the money that I had. So we're already putting you guys on a better track here. We're going to be not putting money up front. Trading view, free. Demo account, free. The highest fucking leverage skill in the world. Okay, so I'm going to show you guys how you guys can set up a demo account on HeroFX. Okay, so there's going to be a page that says accounts right here. Okay, you guys are going to click on it, and then it's going to say live account. No! No live accounts yet. We need to learn the skill of trading, okay? We need to learn the skill of trading first. There's live accounts, and then there's demo accounts. We want the demo, okay? We want that fake money. We want to learn the skill of trading without having to risk money. That's like, a good comparison of this is like you having never played basketball before in your life, and you go to the blacktop with like $1,000 in your pocket. You've never played basketball before in your life, and you go up to people that are playing, really good players, and you're like, yo, I got a bando for whoever's trying to run ones. You slap that bitch down, and then what do? You fucking lose. Obviously. Why? Because it's your first time playing basketball. It's your first time trading. Versus if you just show up to the park with no bread and you just keep playing until you get good, until you get really fucking good, and then you switch over from the demo to the bando in the pocket, slap that bitch down, and now you're cooking the 60-year-old that's got ankle braces on, and you're hitting them with that fucking jelly. Okay? Sorry, we're getting off track here, but you get what I'm saying. The demo account is where we want to go. Okay, so again, I use Trade Locker. There's a whole bunch of different, like, whatever, configurations. There's demo 0, okay, which means low spreads and 0 commission. There's demo raw dog, okay, sorry, that means raw spreads and fixed commissions, okay, and then there's, or those are the only two for Trade Lockers, okay. Me personally, I do low spreads and no commission. You guys can choose whichever one you guys like. Again, you guys don't really know much about this. I would just go demo 0, okay. That's the best one that works for me, because I prefer low spreads and 0 commissions than fixed commission and raw spreads. I don't like to get fucked raw. I would rather, you know, wrap it and tap it. You know what I'm saying? And well, okay, we're getting way too confused here. Demo account, we got it set up. Same thing here. We're going to click on the account, and then boom, once we set up that account, HeroFX is going to send you an email and say, boom, you got your username, you got your password, you're locked the fuck in, go to Trade Locker, sign in, bling blow, and then we're going to be signed in. And now let's go over to Trade Locker so I can show you guys how to actually execute trades. And don't worry, we're going to get into understanding the charts. We're going to get into understanding the craziness of TradingView, but I need to explain all of these softwares and gizmos and gadgets first so you guys can understand strategy. And I just blitz through everything, and then I say, yeah, go figure out how to find these charts online somewhere, go figure out how to actually set up a brokerage somewhere, go figure it out, little baby bitch. Yeah, I'm not gonna teach you that shit. No, I am gonna teach you that shit, and I'm strapping myself in this fucking chair for the next 7 hours so you guys can learn this shit. Okay, Timmy? You're gonna fucking learn the highest leverage skill in the world. You're gonna learn this shit whether you like it or not. So you better lock the fuck in, Timmy. Let's get on Trade Locker, you bitch. Sorry, Timmy. I forgot to tell you one thing before we get on to Trade Locker. When it says deposited demo account, are you guys going to end up depositing, like, is this real money? No. So if I want to be a quantity, okay, just so it's going to take us, as you guys can see, it says demo right here. This is fake money. This is just imaginary fake money. How much imaginary fake money do you want? I want $100 billion. I want 100 million rupees. Sorry, guys. We've already been locked in a demo account. Let's get going. This is fake money. Overwhelmed. We're looking at a crypto chart right now. We don't want to be looking at a crypto chart. But eventually, when we get back over here to TradingView and we're analyzing pairs like Euro USD, ideally, we are going to be pulling up. Okay, let's do foreign exchange majors. They're blacked out because the market's closed right now. It's a Sunday. But look, we have the same exact chart that we are looking at on TradingView, so we're actually able to execute trades on Trade Locker while looking, see, it's the same chart. Boom, Euro USD, Euro USD. So the only thing that we're using this for is to execute trades, okay? And again, they have an app on your phone where you guys can execute trades as well. And we're going to be using this to do chart work because at the end of the day, this is just like kind of it's like a TradingView integration here. Some people are weird and they like doing their chart work on here, but then it's like, okay, I have to redo my chart settings and I don't want it black. Not that I'm, you know, whatever, but I like my charts looking clean and it's just way more preferable for me to be on TradingView with this clean setup rather than doing the chart work on here and then also having to manage positions. It brings a lot in the mix here. So even though the foreign exchange markets are closed right now, I'll just do an example on crypto for you guys. So again, ideally you guys aren't trading crypto. It's a volatile market right now, whatever. There's just a whole bunch of news on Bitcoin, but down here is where we have our positions, okay? And I'm going to get into this.
Where's Bitcoin at right now? Actually, I want to know that. Bitcoin. Eesh. Oh, it's up for the year. It's up for the 5 years. Damn, look at that. This was the moment to buy for sure. Damn, bro, it's at an all-time high actually, bro. Fuck. Shit hurts me. How come it, 22 cents. Yeah, look, you see? It wasn't all time, bro. Wait, the all-time high was almost 50 cents. 2024, bro. Last year, dude. If I would've, bro. This is when I was investing, bro. This is literally when I was investing into, bro. It was 5 fucking cents, and then it fucking goes skyrocket right after I fucking sell, bro. That hurts, bro. This shit reached 64 cents. I remember when this happened, bro. I was beating myself up for that shit, bro.
Again, later
that shit's not gonna happen no more.
How they work, why they go up, why they go down, and then we're going to go into the strategy of how to actually place trades. And I'm going to go over a couple tools on how you guys can use risk management, because risk management is, there's a whole bunch of things to cover in this video, and we're just getting started. But hopefully, like, trading is starting to make a little bit more sense to you guys now. Like, hopefully, we're bridging that gap of I don't know anything about trading. To trading his bankroll to, okay, I'm getting set up with trading. And then by the end of this, you guys are going to be like, hey, I know everything there is to know about trading, including strategy, including risk management, including how to control my headspace, my emotions, whatever. Okay, but I need to show you guys how to use this thing first, how to actually place trades. So right now, this is the lowest size that I can enter into a Bitcoin trade. And Bitcoin and crypto is a 24/7 market. So the markets are open 24/7. I don't trade crypto. I mean, I do like super long-term investing in it, but that's besides the point. I'm not actively trading it. I trade indexes, and indexes are closed over the weekend. But a brief example of how you guys would enter into a trade. Let's say this is my allocated risk for the day. I'll teach you guys again later in this video how you guys can actually calculate risk using a risk size calculator. But let's say I want to place a trade on Bitcoin and I want to place a buy because, wow, look at that. Price is going up. I want to place a buy. Okay, I confirm that, and then boom, look at that. Oh my God, oh my God, oh my gosh, we're up, oh shit, now we're down $45. Oh shit, yeah, ramp this baby up. Give me more, I want more. We're down $32, but sorry, got a little bit excited. Oh shit, we might take profit. Okay, sorry, I need to teach you guys how to trade. Anyways, now we're in 1, 2, 3, 4, whatever. 4 freaking positions, but we can see what's my profit and loss in fake money. Again, I'm down $38, $34. This is fluctuating. What's my current equity like in my account balance? How much margin am I using? So you're probably thinking like, okay, how do I even know how much money I'm risking? How much money am I going in with, right? A lot of people are like, well, how much money do you go in with every trade? And I'm going to get to that later, but I just wanted to show and explain to you guys how you guys can get in and get out of trades. Okay, so that was a buy position, right? So how the fuck do we get out of this trade? Okay, let me move my head down so you can see what this looks like. I'm a little baby ant now. But you guys can see 1, 2, 3, 4 buy positions on Bitcoin. We can see how much each of them are up. So there's a whole bunch of actions over here. If I'm like literally printing bread, I can share the position to my friends and be like, yeah, trading's bankroll, idiot. You should watch TJR Trade's video. Then you guys can edit the position. You guys can do a partial close on the position. You guys can fully close the position. So let's say I'm like, okay, this trade is looking scary. I want to get out of this. Boom. We hit close position. We confirm. Damn it. We just lost $24. So that like fully closed that one position. I'm still down $25 floating on these other 3 positions here, right? Why? Because we entered into buy positions here and price has just gone down ever since. Man, TJR sucks at trading, right? But there's a bunch of other actions that I want to teach you guys about while we're on this platform and while we're on the topic of this. So that was a full close. What if we want to just close a little bit of this position? So the way that at least Hero Effects and Trade Locker calculates position size, it does it on lots. And I'll explain what these are, and I'll explain how we can calculate how much we're going in with per trade based on lot size. And there's a really super easy calculator that I'm going to show you guys how to use that makes your life way simpler, okay? But right now I entered in with 0.1 lots on this. So let's say I only want to close half of this position. What do? I just crank this down to 0.05 lots. And then what can I do? I can press close, confirm 0.05 out of the 1 lots. And now I have not only this one fully closed position, but I also have this position that I closed for 0.5 lots. And then I still have that remaining position with close the 1 lot, and then what can I do? I position. What do? I just crank this down to 0.05 lots, and then what can I do? I can press close, confirm 0.05 out of the 1 lots, and now I have what I use the locker a little. And while we're on a bunch of other actions that I want to teach you guys about while we're on this platform and while we're on the topic of this. So that was a full close. What if we want to just close a little bit of this position? So the way that and all as how to use 0.1 down to 0.5 out of the 1 position, but I still have open, okay? And then let's say I want to close the remainder of it, 0.05, close, confirm, boom. Now I fully have closed out of that remainder of the position. Now, there's another thing that I need to teach you guys about that is going to be very useful as time goes on in your trading career, and hopefully it starts at the very beginning of your trading career. This is stop loss and take profits. I'm going to teach you guys where to strategically put these based on our strategy, so we are actually able to make money and make more money when we win and make less money when we lose, so we can end up being profitable traders. Okay, but first I need to just show you guys how to place these on the platform. So there's 2 different ways. We can either click on this, okay, we want to edit this position. Sorry, I'm used to it on the phone. Most of the time on the phone you can just click on the line. So you're going to go ahead and click edit position. This tool shows up right here. We have stop loss and take profit, okay? These are probably some of the most useful tools in day trading ever, okay? And this is kind of getting into how much money am I going to make on this trade? How much money am I going in with on this trade? This is where these tools come in handy, okay? So again, we're in this buy position, our stop loss. This is another nice thing about Hero Effects and Trade Locker. See how easy it is for me? I can literally just drag it. I can drag it and put it wherever. So let's say our stop loss is used to show when and where we want to play. Idea is invalidate when our strategy has been completed, okay? And we want to get out because, again, trading isn't just win, 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 okay? Trading is like win, loss, win, win, loss, loss, win, 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 loss, loss, win, loss, okay? It's always back and forth. You're going to have winning days and you're going to have losing days, and I'm going to get into that within the psychology portion of this long-ass video that you guys are watching. And again, shout out to everybody who's been sticking along for this. But
yeah, it's been
you guys are
46
going
long-ass
to
minutes,
go,
TJR,
go
what the
through
fuck?
a period where you're like,
Stop being
man,
talking
I
about the
keep
graph.
losing, or like, oh, I never want to lose. No, you have to be willing to lose in trading, not only to learn from your mistakes, but also because no trader is 100%, okay? Every single trader misses shots, misses trades, okay? And I'm going to use a lot of basketball analogies in this video, but it's true. Michael Jordan has missed a whole bunch of shots in his career, but that doesn't stop him from being the GOAT. It's the same thing with trading. We always want to take the shot, but we don't know if it's going to go in or not. All that we can do is we can train our skill on taking those shots so that the probability of it going in is a lot higher than before. So stop loss, again, I'm going to show you guys how to strategically place this, but this is cool. There's a couple things here. So not only when I drag my stop loss, it sets it to the price. So see, the price is 92645. Let's say I want to put it lower. It changes it to 91965.31. And then it also shows us the percentage of our account balance that we're going to be losing. So if we lose this trade, we're going to be losing way less than 0.01%, but we're going to be losing 12 bucks. Okay, from our $100,000 account size that little Timmy really just wanted to be a billionaire with, right? So again, if I move this up, what are we going to be losing? And this is kind of getting into like, how much am I putting in? If we lose the trade here, how much did we go in with? Essentially $9. So that's all you need to know. There's a whole bunch of these beginner day trading videos that are like, well, when you use this leverage and you have this account balance and then you enter in with this many lot sizes, you're technically utilizing the leverage from the brokerage, and then you're actually leveraging your current account balance by 500 or 50x depending on what leverage that you use, and then you're going to be entering in with this many contract size which correlates to this many lot sizes, and then like, shut the fuck up, you nerd. And just how much am I risking per trade? And I had to go through that. So I'm telling you guys, don't go through that shit. Actually. Just look at how much am I going to lose? Damn it, Timmy, how much are you losing the family today? $9, bet. Your lunch money's on this trade. So boom, that's stop loss. Take profit is where we want to win our trade. So again, let's say we want to win our trade up here. How much money are we going to make? Again, we're risking $9 to make $8. It's a pretty shitty trade. Ideally, we have a good risk reward, and I'm going to talk about that. Again, it's a long ass video, but our take profit shows us what price we want to close the trade at. So again, let's say we want to make $12, boom, our take profit's up here. Okay, and these are just drafted right now. So once I click confirm, it means, okay, I entered into this trade. If it hits my take profit, if I win the trade, if I make the shot, I make $12.89. If I lose, if I miss the shot, I lose $9.83. We confirm that, and boom, we got the red line and the green line. Scary ass lines, right? And then we can also see on the screen, we have stop loss, take profit, okay? And then we can see where the current trade is at. So right now, this trade, we're at a net negative $1.35, and we can constantly track this. But we know this price gets hit. You can enter into trades. That's how you guys can exit trades. That's how you guys place take profits. That's how you guys strategically place take profits and stop loss. Can place your stop loss strategically and place your take profit strategically, so you guys can have a good risk to reward ratio. So your rewards are higher than your risks consistently when you're taking trades. W in the chat. Okay, there's one more thing actually that I want to show you guys on this program and on this platform, on this brokerage, okay? So we're gonna go ahead and close this trade out. We're gonna close all of these trades out, okay? We're gonna close position. We ended up losing 55 bucks. Yeah, so that was on a buy position, okay? Again, we wanna buy low and sell high, okay? I bought within 1 minute and then sold like whatever, a couple minutes later. So obviously price isn't going to fluctuate that much, and it's the weekend, low volatility, whatever. So that was a buy position. What happens, remember, let's say the market crashes, and how do we sell? And then how do we enter into a sell position to actually make money? Because if we sell high and then buy low, we're still able to make money. So it's the same situation. Right here, click sell, confirm, and that doesn't mean you're selling your previous buy positions. No, it means you're entering into a short trade. So there's a long position means we think price is going to go up. We want to buy the thing. Or we can enter into a short position, which means we think the thing's going to go down. It's the same situation here. We can close the position completely. We can partially close the position. We can edit it. And when we're in short positions, where's our stop loss? It's going to be above where we entered into the trade, right? Because how do we end up losing money? on short positions, price is going to come up, and eventually our trade idea will get invalidated if it keeps going higher and higher. And we're eventually going to want to get out of this trade at some point in time, right? So again, in this case, we're now risking pretty much $100 on this stop loss. Okay, so 0.1% of our account balance. Okay, and if price hits this, we're going to lose money. So now, since we're in this short position, since we're in this sell position, we're trying to sell high and then buy low. And when we mean buy low, it just means hitting take profit. And again, I don't even want to go too deep into that because you guys genuinely don't need to know that shit in order to make money in trading. Just like straight up, you guys don't need to know that shit. Just know short position, sell position means we want price to go down, and we lose trades when price goes up and our stop loss gets hit, and we win trades when price moves down and our take profit gets hit. Okay, so our take profit is now low versus, so in a short position, our stop loss is above the entry and our take profit is below the entry. In a buy position, in a long position, our stop loss is underneath the entry and our take profit is above the entry. Because when we're buying, we want to exit when price is at a higher price, and when we're selling, we want to exit when price is at a lower price. Cool? So when we do this, we hit confirm, and then boom. Our stop loss is right here. Our take profit is right here. Cool. So that's how you guys can enter into trades. That's how you guys can enter. That's how you guys read those candles us about price. Okay. I also want to tell you guys, like, how do these foreign exchange pairs even work? Like, why is the euro versus the US dollar going down and then going up? Like, we kind of want to understand some of these things in order to understand, like, what are we even trading? Okay, it's one thing to just have a strategy and be like, candlestick go this way, candlestick go that way, I enter trade because I am TJR sex slave. No, you're not. Keep that in the video because I want you guys to hear that, but you're not. Not yet. Okay, lock in, twin. Lock. Not yet. I want you guys to hear that, but you're not. Not yet. Okay. Lock in, twin. Lock in. Okay, let me explain to you guys how these pairs work, okay? This is something that you guys are going to see very frequently across all trading, okay? So this is a Forex pair, so it's the Great British Pound against the US dollar. You guys see this in crypto all the time. You ever wonder why crypto pairs say like BTC/USD? It's because it's Bitcoin against the US dollar. You ever wonder why gold is XAU/USD? It's because it's gold against the US dollar. This is how we trade, how we make money in the markets. This is super quick and fast explanation because I had to watch a fucking British dude go over this shit for 50 minutes and I was literally ripping my hair out while I was watching that beginner day trading course. And this dude's like, this is so important. And turns out it's not that important. But when your family members are like, hey, little Timmy, explain this Forex shit that you're doing. And you got to come up and you're like, I don't know, mama. Just buy low and sell high. Okay, they're going to be like, get the fuck off of that shit. You're never going to be successful. And that was essentially what happened to me when I couldn't explain it. So I'm going to explain this as simple as possible so you can explain it to your families, and then you're never going to need to use this shit again, okay? 2-minute segment of me explaining foreign exchange, how this shit works. So this is a Forex pair. There's commodity pairs, there's crypto pairs, and then there's also like indexes and stuff, and we'll get into that later. So Forex pairs are literally just quoted pairs, okay? It's one currency against another, okay? So in this case, the base pair always comes first, and the quote currency comes next. Okay, so the base currency, Great British Pound. This essentially is showing how many US dollars is equivalent to one single Great British Pound. Okay, so one single Great British Pound is equivalent to 1.32 US dollars. Got it? That's literally all it is. It's a fucking fraction, okay? So I know this sounds confusing, but the price of a pair is how much of the quote currency, it costs to buy 1 unit of the base currency. So the base currency is always just one, okay? And crypto is a really good way of understanding this. So like if we go to the BTC/USD chart, I'll literally pull that shit up right now. Look, BTC/USDT. We pull this up. What is the price at? $93,471. So one Bitcoin is worth what? $93,497.
Not anymore. Now it's 100.
So there's
shit,
one
bro.
of these equals how many of these? The quote currency is how many of it. And most of the time, the quote currency is almost always going to be in USD, unless you're trading like weird Forex pairs. And by all means, like you can trade the Forex pairs, but this is just understanding how the shit works. So again, Forex pairs, it's one, the base currency is always worth one. And then the quote currency is always what this one is equivalent to. So let's say like we wanted to do the pound against the Australian dollar. It would be like GBP / AUD, and then it would equal whatever 1 pound is equivalent to in Australian dollars, right? So it's whatever the base currency is equivalent to in the quote currency. And that's all you need to know. Don't be thinking, well, yeah, let me do my research on them fucking pounds. No, bro, don't do your research on them fucking pounds. The only thing that you need to know is Big Ben, British biscuits and beans, okay, bro? Don't be doing any more research on them fucking pounds. The only research you need to be doing on the pounds is on the charts right here. But that's essentially how price and why price moves in the foreign exchange market. So same thing, Euro USD, okay? So if we see this, the Euro against the US dollar, let's do a test here. This is the price of Euro USD right now, and the market is closed. So how many dollars is 1 euro worth? Let's wait for the class. How many dollars is 1 euro worth?
Me.
God damn it, Timmy! Okay, it's 1.03738. That's how many dollars 1 euro is worth. Okay? Now, let's do it with gold, because there's like commodities and shit. Let's do XAU, because that's the sign for gold, USD. Okay? Again, this is the pair, gold. Let's click on it. Gold. What is the price of gold against the dollar? $2,858.14. That's how much it costs. I can't remember how much gold this is equivalent to. I think it's like whatever, a gram or something, or an ounce. I don't know. It does not matter. We just need to understand this for when we explain to our families how this shit works. Okay, so that's literally it. And then last but not least, indexes, which is what I mainly trade. It's pretty much the same thing, but indexes doesn't have the /USD because indexes are just US indexes anyways. So indexes, it's just the same exact thing. So again, if we want to buy one share of the S&P 500, how much would it cost? $5,954. Or how much is one share of the S&P 500 worth? $5,954.51. How much is one share of the NASDAQ worth? $20,884. Okay, that's all it is. Okay, foreign exchange, indexes, crypto, commodities. We're learning, y'all. We're learning. We're actually learning you guys are learning way faster than I had to learn back then. So like everybody, if you guys haven't fucking subscribed yet, I don't know what you're doing. Get your hands off of your dick, click the subscribe button, and then go back to stroking your shit. And let's keep this ball moving, okay? Now we know what to say to our parents when they ask us what we're doing. We know how to explain it. We know how to enter into trades. We know how to set up all of our shit. Now we can get into the fun stuff. Let's get into strategy, bros. Let's get into how we can actually understand where the fuck this is going, how we can make money on it. Let's get into this shit, bro. Get excited. This is what you guys came here to learn. You guys came to learn the strategy. You guys came to learn about that bankroll, all right?
Yeah,
let's get it. So before we can actually get into all the fun shit like buy here, sell here, make $1 billion, whatever, we need to understand what these candlesticks even are, what they mean, TJR? What all these little numbers up here mean, what these prices mean, okay, what all these tools can do. So that's what I'm going to break down now. This is going to be within TradingView. I'm going to pull up a couple graphs to help you guys understand some things and some basics, and then we're going to get into strategy, then we're going to get into risk management, then we're going to get into psychology and everything else that you guys are going to need in order to start working on the highest leverage skill literally in the world, which is, I mean, it's so cool to say that
I agree, because I need to write some notes. I haven't written anything down.
One of the
Come on,
highest leverage
TJR.
skills
I'm
in
here
the
to
world,
learn.
and you retards
Teach
can
me
do
your
it too.
ways.
So the first thing that we're going to need to do is understanding these Japanese candlesticks. So this is a super good graph, and understanding of these candlesticks, we'll get into time frames and how those represent these candlesticks a little bit better when we get back on the chart. But these are our literally only tools on the chart. It's just up and down candles. So like how are these going to help us, and how can we use these to our advantage? Here we go. We're getting into the big shit now. Okay, what is a candlestick? It represents price movement within a certain amount of time and everything that price did within that certain amount of time. So each one of these candlesticks represents price movement within a certain amount of time. And the certain amount of time is dependent on what time frame you are on the chart. And I'm going to explain that right after this. But first, I just want us to understand candlesticks in general. So this candle right here, an up candle, right here is called, this filled in part is called the body of the candlestick. These little lines right here, these snail trail lines, are called wicks. So again, this is the body, and then notice why they're called candlesticks, because they have little wicks. It looks like a candlestick. Let me see what I'm doing. The shaded in part is called the body. These little lines that go up and down, and I call them snail trails for a reason, are called wicks. Now, before we even get into time frames or anything, let's just explain this candle. So let's say that we're on the daily time frame, and you don't need to understand what that is just yet, but let's say that this one candle represents 1 day's worth of price movement. So we see open, we see low, we see close, we see high. What do all these things mean? The open means, okay, the day started, and this is where price was when the day started. When this candlestick opened, that was where, this right here is where price was at. Then, at some point in time during and throughout that day, price moved down to this point in time. So that's why I say it's called a snail trail, okay? Because anywhere that price goes, it leaves a trace. It's going to leave a wick. So the lowest point that price got to on this day was right here. How do we know that? Because of the wick. The wick shows us that. The highest point that price got to within the day was all the way up here. And then where did the price end at on the day? So we know that the day opened at this price right here. And I know we don't have prices to the side, but I'll show it to you guys on the chart after we get through this. And I know this is confusing for you guys right now, but you guys will get the hang of it as we start going through this a little bit more. And that's why I'm being a little bit more serious now, because this is when we're getting into the big shit. Okay, so right here is where the candlestick opened, and this is where, this was the price that the day opened at. At some point in time throughout the day, price came down to as low as this point, and that is marked out by this wick. At some other point throughout the day, price got all the way up here. How do we know that? Via this candlestick's wick. And then when the day ended, price ended up coming back down and then ending and closing the day right here. Okay? So why is this a bullish candlestick? Because we opened at this price and we closed at a higher price. Now a down candlestick, a bearish candlestick, is the exact opposite. So now let's say these are 2 consecutive daily candles. So again, this shows like 24 hours worth of price action. Now we closed right here, right on the previous day. So when this day closes, what happens? A new candlestick opens. That's why we'll see this bullish candlestick close at this price, and then the next candlestick opens at the past candlestick's closing price. More often. Okay, there's some exceptions, but we won't talk about that for now. So when this candlestick closes, this candlestick opens. It opens right here. At some point in time throughout this day, price got up here. How do we know that? Through the wick. At some point in time, price came all the way down here. How do we know that? Via the candlestick's wick. And then once all 24 hours has finished, price closed right here. How do we know that it's a bearish and down candlestick? Because it opened at a higher point than where it closed at. I know this is a bit confusing, but we're gonna take this slow and steady here. I know this is super daunting, but we're going to get through this and you're going to be amazed at how far you come by the end of this video. Pause how far you come. Come on now. You get what I'm saying.
Come on, man. Nobody thought about that.
This D stands for 1 day's worth of price action. So these are time frames. This right now, each candlestick is representative of 1 day's worth of price movement. Again, the price movement is shown via these candlesticks. What happens if I move to the 4-hour time frame? We now see price action, and these candlesticks now show 4 hours worth of price movement. It shows more detail on the chart. So when we were on the daily chart, we're only seeing like, okay, this is just one up candle. This is 24 hours, right? This candlestick right here is 24 hours worth of price movement. But when we go down to the 4-hour time frame, we can see those 24 hours split up into 6 candlesticks now. Why? Because 4 times 6 equals 24, 24 hours in a day. You get what I'm saying? So now we can see it's spread out a little bit more. So now each one of these candlesticks represents 4 hours of what price did. So on this candlestick right here, for example, what did price do in those 4 hours? Where's the open, high, low, and close of this candlestick? It opened right here. How do we know that? Well, because price went up, right? So if it closed up, then we know the open is right here. It opened right here. At some point in time during these 4 hours, price came down.
Shit didn't go down at all, bro.
To this price right here, $87,303. At some point in time during that 4 hours, price came to that price. And then also during those 4 hours, at some point in time, price came all the way up to $95,152. And then after those 4 hours were said and done, where did price close at? $93,533. And now we can see on the right-hand side, see this little timer? This is showing how much time is left until this current candlestick that is forming has to close. So this current candlestick has only been opened for the past, what is that? It's been like 34 minutes because there's 3 hours and 26 minutes remaining on this. And we can see that when this 4-hour candlestick closed, where did the next one open? Where this 4-hour candlestick closed. And we can see these wicks, these snail trails, form in real time. So right now, for the past 35 minutes that this new candle has been open, where has price gone? It shows us every inch of where price has gone so far. In the past 35 minutes, how high has price gone?
That's how high it went, right here. Yeah!
It's gone up to $94,200. It opened at $93,533. And right now, price is sitting at $93,923, and it hasn't gone lower than its opening price.
Exactly.
I know this is confusing.
I get it.
We're going to keep going. We're going to slowly push you along.
Keep going.
Now, what happens when I pull up the 1-hour time frame? Now those 4 hours are split up into 4 candlesticks. So now we're seeing even more detail.
Now I'm confused.
So now instead of just seeing one candlestick that represents 4 hours worth of price action, we are now seeing 4 candlesticks. Let me remove these drawings. 1, 2, 3, 4. So these 4 candlesticks in this gray box here represent that 4-hour candlestick. Why? Because now we're on the 1-hour time frame. So now each one of these candlesticks shows 1 hour's worth of price action. So during this hour, what did price do? Well, during this hour, it got to as low as $87,303. It opened from the previous hour's close at $87,420. At some point in time during those 60 minutes during that hour, price got up to $91,957. And by the time that hour ended, price closed at $91,208. And then what happens? The next candlestick opens and then it starts forming. So if we look at most recent price action, this candlestick has how long to close? 23 minutes and 35 seconds. Where has it been in the past hour? It's been up to $94,200. Where did it open at? $93,528. Now it's cool because we can get deeper, deeper, deeper. You can see it literally gets down to 1 minute. So we can see literally every single minute what price has done and where price is going, whether it's going up or down, and where price has gone and how price has moved within every single minute. We can even get down to the second charts, 15 seconds, 30 seconds. We can get down to the 5 minutes. So now these candlesticks are showing 5 minutes worth of price action, okay? So now we can see that previous bullish 1 hour candle in, boom, a whole bunch of 5 minute candles. So now we're seeing, okay, boom, there was 2 up candles, then 2 down candles, then 1 up candle, then 2 down candles, then 2 up candles, then 1 down candle, okay? We're able to see every single detail of price movement using these candlesticks. And these candlesticks are super, super beneficial. And it paints a picture and it tells us a story about where price is going, where price went, and how we can expect price detail of candle and 2 bunch of seeds, 5. We can even price has gone, price in 9 seconds. Where has it been in the past hour? It's been up to $94,200. Where did it open at? $93,528. Now it's cool because we can get deeper, deeper, deeper. You can see it literally gets down to 1 minute. So we can see literally every single minute what price has done and where price is going, whether it's going up or down, and where price has gone and how price has moved within every single minute. We can even get down to the second charts, 15 seconds, 30 seconds. We can get down to the 5 minutes. So now these candlesticks are showing 5 minutes worth of price action, okay? So now we can see that previous bullish 1 hour candle in, boom, a whole bunch of 5 minute candles. So now we're seeing, okay, boom, there was 2 up candles, then 2 down candles, then 1 up candle, then 2 down candles, then 2 up candles, then 1 down candle, okay? We're able to see every single detail of price movement using these candlesticks. And these candlesticks are super, super beneficial. And it paints a picture and it tells us a story about where price is going, where price went, and how we can expect price to react and move in the future, okay? So that's candlesticks explained. Again, let's go back here. We have the open, we have the close, we have the high, we have the low. Let me show you an example of a bearish candlestick because we didn't show any bearish ones. But a down candle, again, where did price open on this down candle? Right here. Why do we know that price opened right here? Because it closed down, right? So we know if it closed down, if it closed bearish, the open is going to be above the close. So it opened at this price at $93,811. At some point in time during these 5 minutes, it got up to the price of $94,087. At some point in time during those 5 minutes, it got as low as $93,476. And then at some point in time during those 5 minutes, price closed at $93,514. And then what happened after that? Once price closes, another candle opens. And this goes on forever and ever and ever and ever. And we can scale back to like 15 minutes. Now, boom, price action is being demonstrated in 15-minute candles. And I know this is super overwhelming. You're like, what time frame do I look at? What am I even doing on this? What's the difference between 1 day's worth of price action and 1 minute's worth of price action? All of that is going to be explained. Don't worry. Again, my goal is to take you guys from literally knowing nothing about trading to giving you guys the highest leverage skill in the world. And this is just the start. And I know this is overwhelming right now. If you guys need to go back and rewatch that like mini candlestick explained portion, you guys can go ahead, feel free, okay? But we are now going to be moving forward, okay? So that was like candlesticks and time frames explained, okay? So again, these time frames are essentially used to be able to show how long and what time frame we want the candles to be split up in to see what price has done. So again, if we want to see on a 15 minute, so that means we want to see candlesticks that open and close and show us price data from every 15 minutes, we would click on the 15-minute time frame. So again, this shows us 15 minutes worth of price movement within each candlestick. If we want to see just 1 day's worth of price movement within each candlestick, we would go to the daily. If we want to see just 1 week's worth of price movement, we would click on the weekly. If we want to see 1 month's worth of price movement, and obviously, as we move higher and higher throughout the time frames, the candles get bigger and bigger because, right, the price fluctuation across higher time frames is going to be a lot larger. And then as we shrink down to maybe the 1 minute time frame, the price fluctuation, and then as we shrink down to maybe the time frames is going to be a lot larger. And then as we shrink down to maybe the 1 minute time frame, the price fluctuations are a lot smaller because 1 minute can only do so much in terms of price, right? So that's time frames and candlesticks explained. I don't want you guys to be feeling overwhelmed right now.
Beautiful.
I know this is a whole bunch of information.
I already learned a lot.
I know when I was at your point in time, I was super freaking overwhelmed with all of the information that was being thrown at me. Just take it one bit at a time. I hope you guys are taking notes during this, because if you guys are, that's huge. Like the whole setting up the software and everything, like that's easy. That's just like a step-by-step, but this is actually like digesting the information. We got to give our body, our brains time to digest this information, fully understand it, and then once we fully understand it, we can move on to the next concept. So again, I don't want to rush you guys through this. This is a really long video, and you guys are going to, if you guys just speed run throughout all this whole video, you probably won't be able to digest all this information. So like, pause this video, rewatch that candlestick, that time frame explained, okay? Understand it in.
You lied to bring me. Yeah. Oh. Is this one good?
Huh? I haven't tried it.
Want to try it?
Nah. Little bro, study.
Yeah, bro, you gotta learn.
Oh my god.
Bro, you're good as fuck. Come on. What are you gonna do right now?
Huh?
What are you gonna do right now?
Oh no, you're probably gonna rest and then get ready for practice.
Alright. Are we leaving early?
Like at. Hold on, let me check the time practice.
Wait, who's taking you though? Me?
Probably. Like 4:40 or 4:30.
Okay. I'll probably go to your room in a bit.
Then we can move on to the next subject.
Cool.
Cool.
Yeah, dude.
Cool. The next thing that we're going to get into is the day trading session. So like I told you guys at the start of this video, if you guys are in the UK, if you guys are in down under in Australia, or if you guys are in the
Dubai chocolate.
United States, if you guys are in Africa, if you guys are in Egypt, if you guys are in Asia, whatever, there is a time to trade for every single one of you guys. And that's one of the beauties of day trading, is there are 3 sessions. Okay. So I'm going to pull up a chart. There's going to be 4 sessions on there. There's technically Australian session, but it's pretty much Asian session. Okay. But there's 3 sessions. There's Asian session, or Asian and Australian session, but everyone just calls it Asian session, London session, and New York session. And those 3 sessions essentially encapsulate the full 24 hours of the market. Okay, so from the day start to the day end, those 3 sessions encapsulate the entire 24 hours of a day. New York session is only open for like a couple hours throughout the day. London session is only open for a couple hours throughout the day, and Asian session is only open for a couple hours throughout the day. I'm going to explain the pros and cons to trading each session, what is going to be beneficial for you guys as traders depending on your time zone, and what is going to be beneficial, what pairs you guys might want to trade during each session. And so again, like if you guys decide like, okay, for your time zone and the times that you are able to trade, it's going to be London session. There's going to be certain pairs that move better, that are going to give you guys better setups during London session than let's say New York session. If you guys say, okay, I want to trade during New York session, there are going to be pairs, indexes, commodities that just move better during New York session compared to other pairs that might not move at all during New York session. So I'm going to bring up a very useful calendar. This is on Baby Pips. It's essentially just shows us the overall session time zone. So right now it's Sunday and we can see the markets are closed for the weekend, but we can still just look. So I set my time zone to Eastern time. That's how I have my charts set. So my charts are set to Eastern time. Down here, I see everything in Eastern time. We can see that down here, let me point to it right there. Okay, you can see the date and then the time. Okay, so where my hand is hovering over right now, boom.
Voy a darle de comer a Yair. ¿Vas a querer comer tú?
So,
Sí. Vas a querer pan también, ¿verdad? Okay.
Boom, it's 15:50 Eastern time, Sunday, the 2nd of March, 2025. Okay, and then we can also, we can go back in time all the way back here. So this was Friday, February 28th. That's all the way down here. This candlestick was whatever, Friday, 28th, February of 2025 at 3:35 a.m. Eastern time. Okay, so let's go back here and let's see and understand the session opens and closes. So Asian session opens at 7 p.m. Eastern time. Okay, there is a small little gap from when New York closes. New York closes at 5 p.m. Eastern time, and then Asian session opens at 7 p.m. Eastern time. Okay, so you guys might as well write this down. Asian session opens at 7 p.m. Eastern time, and then it closes at 4 a.m. Eastern time, okay? London session opens at 3 a.m. Eastern time, and it closes at 12 p.m. Eastern time. New York session opens at 8 a.m. Eastern time and closes at 5 p.m. Eastern time. Now, again, each one of these sessions is going to have their own pros and cons, so I'm going to get into their pros and cons right now. Nice thing about this website here is we can see, okay, we can see the trading volume and volatility depending on what session you're going to be trading in. Now, we can see when we get over here towards Asian session, it's pretty low volume and volatility. So I don't want to tell you guys what you can and can't do, but I'm telling you, Asian session price does not move well at all. And it takes forever to move. And it's just because that session, there's little to no volume. So you typically say never trade during Asian session. That's just my rule of thumb. Never, ever. I don't care if you're trading an Asian pair. If you're trading the USD JPY, market does not move well during Asian session. The only two sessions that I would consider trading would be London session and New York session. So London session opens at 3 a.m. Eastern time. So is that useful for me? No, because I'm not willing to wake up in the middle of the night at 3 a.m. Eastern time to trade London session. Okay, London session, we can see trading volume is usually high during this time of day. All throughout London session, the trading volume is high. So that's awesome. Most of the time during London session, the best pairs to trade are literally all foreign exchange pairs and commodities. So that could be gold, that can be GBP USD, that can be Euro USD, that can even be some off pairs like GBP JPY. I used to love trading that. I actually used to trade London session back in the day, like I was telling you guys about. I would trade GBP JPY, so the pound against the yen, during London session because it worked for me in my time zone. So again, you just have to find what session open and what session you want to be trading in. But this is pretty much like setting your work hours. So again, if you're like, oh, I'm always busy during this time, but TJR likes trading during this time, it's like, no, we're not doing that. You get to set your own hours within trading. So figure out what session you are going to be trading, and those are your work hours for this. Okay, so London session opens at 3 a.m. and then New York session opens at 8 a.m. So for me, New York session is obviously way more optimal than 8 a.m. is obviously way more optimal than 3 a.m. And luckily for me, like during New York session, that's typically when there's the most amount of volume throughout the day, which is great for me because it's boom, the start of my morning, I wake up and I start trading. So again, figure out what time zone you're in, what session is going to be more favorable for you to trade in. So during New York session, foreign exchange markets, they move well too. I would like to say that during London session, the Forex market moves a little bit better than New York session. So if you say, I want to trade New York session, I would recommend you trade indexes, which is what I trade. So that's going to be trading the NASDAQ, that's going to be trading the S&P 500, or just really any of those US equities, okay? But if you guys just say, I want my trading hours to be during London session, cool, you guys should probably trade commodities or Forex, okay? So really any Forex pairs, they move really well during London session, and commodities. Something I want you guys to keep in mind, indexes, if you guys want to trade indexes, they do not move well at all during London session. So again, if you want to trade US indexes, because they are US indexes, they only operate on New York market open. So on like a futures broker where you're only able to trade US equities, you won't be able to trade those pairs once the US market closes. On like a CFD bro, we're getting too deep into it, but regardless, if you want to trade like the S&P 500 and NASDAQ, you can only trade it during New York session. Any other session, first of all, either your broker won't let you trade it, or it's just not a good idea at all, because there's no US money being put into the markets, and the only way for price to move in index is when US money is being put into the markets, okay? So figure out what session is good for you, and then from there, we're going to hopefully explain like, how can we read these charts? On top of that, what charts do we want to be looking at? Because we don't want to be looking at a billion different charts, okay? I know I have a super long list right here, but I'm not trading every single one of these, okay? Like at all. The only ones that I'm trading are these two, the S&P 500 and NASDAQ. I'm only looking at two charts on a daily basis, and I'm able to make a bunch of money. So what makes you think that you have to be looking at 30 different, and trust me, I have been there in your situation before. I've been in your situation, and I've added like 30 different Forex pairs, commodities, cryptos, and indexes, and I've been looking at every single one of them at one time. Trust me, do not do that. I'm trying to save you from mistakes that I made when I first started. That's what this whole video is about, to save you guys from mistakes that I made when I first started, and hopefully put you guys on the right track to being a profitable day trader. And I'm telling you right now, make a new watch list and only make it with one single pair that you want to look at. So if you say, I want to trade during London session, awesome. Trade during London session and trade like the pound against the US dollar. Boom. That's it. Just one. Let's say you want to trade during New York session. Awesome. Trade NASDAQ only. Boom. That's your one. Okay? And you're probably saying, well, then how come you look at two? How come you look at two, huh? Well, because I'm better at this shit than you, and I've been doing it for 7 years, Timmy. When you can get that type of experience, then you can start talking, okay, buddy? I'm just kidding, but like I'm serious at the same time. All right. So once we figured out what we want to trade, again, let me go over some of the Forex pairs for you guys really quick. So just so you guys can get a good feel. Euro USD, super good starter pair. It moves rather slow, but that's good. Understanding what time going New York session, that we've established what hours we're going to be trading and what we are going to be trading. And now that we know candlesticks, now that we know time frames, I think we can actually start getting into understanding why and how the chart moves and how we're actually able to capitalize and make money on these chart movements. Cool? All right, so now we're going to be getting into the bare basics, the absolute fundamentals when it comes to understanding price action and price movements within the day trading markets and just within the markets themselves. So I know a lot of you guys, when I was probably going over the candlesticks, you were like, well, how am I supposed to, like, yes, this is a down candle, this is a down candle, this is an up candle, but how am I supposed to figure out where price is going to go? Don't worry, we are going to get to that. And after all of these things that I teach you guys,
fucking hot out here, but in the little room area. Oh shit, that shit went all the way over there. Goddamn. That's funny. I went to the room, but in that little room area, it's so fucking fresh, and out here it's so hot.
Guys, you guys will be very sufficient in understanding where price wants to go. Okay, it will take some time for you guys to get to that sufficiency level, but just know I'm going to give you guys all the tools necessary in order for you guys to succeed, because that's just the type of guy I am, if I'm just being honest. So the first thing that we need to know how to identify is highs and lows within the market. So you're probably saying, well, I don't even know where to start on that. Well, I'll keep it simple for you guys, okay? A high is a 2 candlestick pattern, okay? So you know those blue candles that are on my chart? It's a move up, a blue candle, and then followed by a black candle. And all you guys are going to do is you're going to look at both of those 2 candles, and you're going to find the tallest point or the highest wick of those 2 candles, and that's a high. I know you're probably saying, TJR, how is this going to be beneficial for me in the long run? Trust me, it will, because it's one of the most important concepts. I know this seems super elementary, but it is one of the most important concepts that you are going to learn. So understanding this now is going to benefit you huge later. Next, a low, it's the exact opposite, okay? A move down followed by a move up, okay? And then you take the lowest point of those 2 candles. So again, a high is a move up, then a move down. So a blue candle, then a black candle. Let's do a little test. Is a high a move up, then a move up? No, idiot, it is not. A high is a move up, then a move down. Is a low a move down, then a move down? You'd be surprised. I know you're probably saying, well, yeah, obviously it's not. You would be surprised. That's all I'm going to say. It's a move down, then a move up in the lowest point of those 2 candles. Cool, let's go into the chart and work on identifying them. So, where are the highs? Oh yeah,
highs
see,
right
now
here.
it gets a little bit
Right here.
scarier.
Right
Now
here.
that we're looking at all of this mumbo jumbo, gets a little bit
Actually, I
scarier.
don't
So
know, man.
what we're gonna
The
do
high
is
is
we're
right here,
literally just
actually.
going to walk through this, and we're just going
High
to
is right
label
here.
highs and lows. What's a low? A move
Low
down, then a
is
move
right
up.
here.
So where do we have lows? Well, this is a move down, then this is a move up. Cool. Where's the lowest point of those 2 candles?
Boom.
Right here. Boom. That's a low. Where's a high?
Okay.
Well,
High
it's a
is
move
up
up,
here.
then a move down, right?
Move up, move down.
Move up, move down. Awesome. The highest point of those 2
wait,
candles.
what?
This is a high.
That was this one.
Next one. Boom. Move up, then a move down. Highest point of those 2 candles. This is also a high. Move down, then a move up. This is a low. I have a question for you guys. This
I got a lot of
candlestick
questions
wick
for
right
you,
here, what
man.
is this?
The fuck?
This is a tricky one.
It's nothing.
This candlestick wick right here, what is it?
If you said hi, I'm literally
No, it's
going
not.
to gargle your ball
Ah! Ahí voy.
sack with my tongue swirling around your pubic hair and then chomp down on it.
That is not a high. A high
Yeah, I knew that, but was that necessary?
is a move up, then a move down.
here.
So where's the high? Move
Right here.
up, then a move down, the highest point of those 2 candles. Move down,
Right
then a
here.
move up, the lowest point of those 2 candles. Boom.
Right
Are
here.
we getting the feel? Are we getting into
Right Yeah, I'm getting it. I'm getting it.
Okay, are
What?
we getting into the flow of
TJR, why, dude?
things now? Are we or are we not? Was that just me? Move down.
Hold up, let me go get my food. I'll be back. Don't follow me. Don't follow me this time. yeah. Oh yeah. Shit gonna be smelling like menudo. Oh, fuck it. Oh. Ooh, that shit almost slipped. Almost slipped. Alright, now you guys can keep following me.
Down, then a move up. Boom. Low, move up, then a move down. Boom. High. Okay, now let me show you a better example of what's not a high and what's not a low. Because again, some people they be on that dumb shit. Right here, we have a low, right?
No.
Where is it?
It's right here.
Right here. You, Timmy?
Right here.
Where is the low, Timmy?
Right here. It's right here.
Well, it's at the lowest point of those candlestick wicks. Ah, clap it up for Timmy. He got it right.
Wait.
Timmy.
No.
You little
No.
Retard.
Hey.
Don't make me spank you on the bottom of your ass with a full stack of books.
That is not a fucking low.
Fucking Timmy.
Where's
man.
the low?
Why you have
This is
like
black
top
then
on it?
black.
Like,
That's
on-
not an interracial.
That's what
That's
I'm
not
saying,
an
I never said that.
interracial
Right
marriage.
here.
We need a black and a blue,
not
or a
interracial.
black and a white, baby, light skin type shit. Okay, we need black then blue. Black then blue, lowest point of those two candles. Where is the low? Boom. This is the low. It's not this.
Oh, shit.
Why? 1 black, 2 black, 3 black, 4 black. That's like, we're not fucking with all of that, okay? We need black, then blue. That's the low. Okay, let's show a good example of the opposite. And we actually have it right here. Where is the high? Right here. Is it this because it's the highest point? No.
No.
Why? Because move down, then a move down. It's not a fucking high. Move up, then a move down. This is a high. We good? Good. Now that we understand highs and lows, guys, you guys are doing good. You guys are doing good. You guys just have like another 5 more hours and then 2 years of struggling until you turn. I'm kidding. But low key though, you guys do have some more work to put in because it's not as simple as just highs and lows. Because again, let me ask you, where do you think this chart is going? I can tell you right now where this chart is going. But I can promise you right now with the information that I've given you so far, you ain't got shit. So we keep plowing through, and I'm gonna keep plowing through for you guys. Next thing that we need to understand is trends. How does the market even move? Okay, so let's put a pin in identifying highs and lows in the market. Also, pause.
actually need that.
Before we get into this, go on your own on TradingView, mark out 5 highs and 5 lows, just to because again, there's one thing of
Alright, that's what he said. Alright, so right now we're in the 5-minute mark. No, we're in the 1-minute mark. Holy shit. No, let's do, what, 15-minute? How do you do this? Reset view chart? Okay, beautiful. Alright. Okay, so this is a high right here. This is a low right here. Nice. So then this goes right here, and if this breaks through here, this would go up to here, no? That's my thesis, at least. The fuck is this? Is this considered a high and a low, high and a low, high and a... Damn, this shit would rock. So I'm guessing, from the look of it, right, let's do some, he just said to do highs and lows. Damn, that shit is confusing, dude. Cause okay. So what? This is a high? No, because it's no good. No. right, this is a high. Actually, I think this is a high, and this is a low. And then high, fuck, no. Damn, bro, this shit is fucking a little confusing. What? I don't think any of those are highs and lows. God damn. Or what if we do the 30-minute? You don't see anything about that. Alright. High. Ooh. High. Then a low. And then high. And then a low. Oh, no. This is a low right here. No? I don't know, man. Just right when I thought I had it, bro. Right when I thought I had it, bro. I look at the chart and it looks like a whole lot of fuck shit. It looks like a whole lot of
You just watching this video, and then there's another thing of you guys taking action. I need you guys consistently taking action with this video in order for you guys to fully digest this. Because if you guys just sit and watch and you're like eating your popcorn, man, the TJR guy's kind of fucking funny. I think I'm gonna learn how to. No, bro. No, it's not gonna work. Okay, so what I need you guys to do, go ahead, mark out 5 highs and 5 lows. Done? Awesome. Now we can get into how does the market move? The market moves in 3 different ways. It goes up, it goes down, and then it goes sideways. So we need to be able to identify when the market is going up, when the market is going down, and be able to identify when the market's going sideways. So this is going to be introducing trends, okay, and market structure. So to keep things simple, when the market goes up, does it just go up like this forever? No. Even Bitcoin doesn't even do that. Okay, when the market goes down, does it just go down like this and down forever? No, even meme coins don't do that, okay? And then also consolidation or sideways movement. So when price moves up, how does it move up? Get very familiar with this terminology. It moves up in higher highs and higher lows. So remember, we're taking the pin out of the highs and lows now, and we're plopping it back in here. Highs and lows, okay? So how do we identify it? Okay. When the market's moving up, it moves in what? Higher highs and higher lows. So if we have a high right here and then a low right here, and we're in an uptrend and market's moving up, what is market going to do? It's going to do what? Make a higher high than the previous high that it made, and it's going to make a higher low than the previous low that it made. And then it's going to make a higher high than the previous high that it made, and then it's going to make a higher low than the previous low that it made. And then it's just gonna keep going like this. Cool? So before we show downtrends, let's show examples of this. We've had pretty brutal price action the past couple weeks and months, so I wanna find a good example of this. This is kind of like the start of a good example here. Okay, where's our low? Right here. Where's our high? Right here. Okay, high, low. Price pushes past this high, then does what? We have a higher high, and then we have a higher low. And then what happens? We have a higher high, move up, then a move down. Then we have a higher low, move down, then a move up. Then we have a higher high, move up, then a move down.
Right.
Then we have a higher low, move down, then a move up. All the way until, boom, structure gets broken on this move down. So, uptrends, how do they move? In higher highs and higher lows. Flow state, baby. Boom. So when we're making higher highs and higher lows, what are we expecting the market to do? To continue the trend. The trend is your friend. Get very familiar with that as well. The trend is your friend in this market. Because if the market is trending up, what are you probably going to want to do? Press buy. If the market's trending down, what are you going to probably want to do? Press sell. But before you guys log into your brokerage and put $1,000 billion on what I just taught you, we need to learn way more, because it's a lot more than just higher highs and higher lows and blah, 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 and we're going to be billionaires. Okay? It's a lot more than that. Now, downtrend, what is it? It's the exact opposite. So when the market is going down, what is it doing? It's making lower highs and lower lows. So it follows that same flow state movement and follows that same trend where we have a high, a low, lower high, lower 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 low, and boom. That's how a downtrend is formed. Plain and simple. Let's go ahead and let's identify it on the market. Because on the S&P 500, it's kind of like an up-only type of index, so it's kind of hard to find downtrends. There's like mini downtrends here. This is fine. Ready? This mini downtrend within the uptrend is fine. We have a high right here, right?
We have a low.
We have a low. We have a high right here. We have a low. We have a high right here, and then we have a low. High, low, lower high, lower low, lower high, lower low, before the trend reverses. And I'm going to teach you guys how to, one, be able to identify these reversals, two, be able to trade these reversals, and three, be ahead of the game so that you guys don't get caught up and lose trades on these reversals when you're trying to trade within the trend. Got it? Got it. But for the time being, I want you guys to pause this video, go to TradingView, boom, go ahead and mark out, just go and identify, and it doesn't matter what time frame, okay? You can be on the weekly, the daily, whatever. That's something else that you guys need to know and understand. Every single thing that I'm teaching you guys on here is applicable to every single time frame. So that's the cool thing about the market. This is on the weekly time frame, right? Each one of these candles is a week's worth of price action. Not only are there highs, lows, lower highs, and lower lows on the weekly time frame, but when we go down to the 5-minute time frame, is this structure the same for identifying downtrends and uptrends? Yes, it's the exact same. Let's find an example here. This is a good example. Look. High, low.
I just finished eating. My bad. I gotta go take a piss. Got full, man.
Lower high, lower low, lower high, lower low, lower high,
Lower low.
lower low, lower high, lower low, lower low, until what? The trend reverses. So that's the cool thing about these trends, and that's the cool thing about all of these tools and strategies that I'm going to show you guys in this video. They are applicable to every single time frame. These trends happen on every single time frame. The way that the market moves, it moves the same on every single time frame. So once you know how to trade, that's why I'm telling you trading is literally the highest leverage skill in the world, bro. Because once you learn how to day trade, you are able to predict price and market movements on every scale. on the weekly level, on the monthly level. You'll know where price is going to go within the next 5 minutes. Like, it's so powerful, the skill of day trading. And that's why I'm so passionate about this shit. Man. Because I know what it did for my life and I know what it can do for yours. And that's why I'm making this video for you guys. So, continuing, where we know what to look for when the market's moving up. We now know what to look for when the market's moving down. What happens when the market's moving sideways? That's called consolidation. And typically, the market will just be looking like this. Okay, it won't have any sort of trend. It won't have any sort of direction. There's no higher highs, there's no higher lows. It's just, it's making like random highs, lows, whatever. And it's just moving sideways. So, perfect example of that is literally what we're in right now on the daily time frame. So if we just look at this, most of the time I show and demonstrate consolidation just by a big rectangle. Why? Because this isn't a trending market. This market is moving sideways. So we can see we have a high, then a low, then a lower high, then a higher low, then a lower high, but then a lower low, but then a lower high, and then a higher low, and then a higher high, and then a higher low, but oh wait, now that's a lower low,
the highs and lows,
and then a
like
higher
that.
low, and then a higher high, and then a lower low. See, it doesn't, this is not a trending market. This is a sideways market. But luckily, there are ways to trade this, and I'm going to teach you guys how to trade it. Again, now that you guys know how to identify consolidation, go ahead and do that. And again, just like moving up and moving down, this is applicable on every single time frame. So this is like literally the past couple months on this, because each candlestick represents a day in the market right now, because I'm on the daily time frame. Bro, like this has been, we have been in this little consolidation range for the past couple months, but we can even scale down to lower time frames and we can find consolidation there as well. So like, look right here, look at this. The market is just freaking moving sideways. High, low, blah, 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 blah. It just looks disgusting until the market finally breaks out. And then what happens? It starts trending down, makes a high, then a low, lower high, lower low, lower high, lower low. Okay, so we need to be able to identify not only downtrends and uptrends, but also consolidation. Cool. Once we have that, we are ready to move on to the next subject. So now that we know how to identify trends, now that we know how to identify highs and lows, we're on to our very first concept and our very first confluence that is going to be extremely beneficial for you guys in trading, which is called break of structure. So I'm going to break down every single one. So first of all, I know I'm using big words, but at the end of the day, I like I told you guys before, I'm like actually on the spectrum. So I'm just like a nerd with the trading shit. So I prefer to call things their correct names. But confluence is pretty much just like, it's like a reasoning to get into a trade, or like it's a reasoning for why price moves. So most of the time you say like, oh yeah, what were your confluences to enter into a trade? Like, what were the reasons for why you entered into a trade? And you say like, oh, there was a break of structure and there was an imbalance of price here and price came in and it filled it, blah, 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 bankroll. So we are going to cover break of structure first. This is a confluence, okay, that is very useful for us. And it is kind of one of the first steps of understanding price movements. So break of structure. You often see people abbreviate it as just BOS, okay? Boss man D-Lo. All right, so what is break of structure? So you guys just learned about trends, right? You guys know what a trend is. Break of structure is essentially when the structure, the trend breaks, okay? So when the current trend gets disrespected. That's all it is. When the current trend gets disrespected. Now, how do we identify it? I'm going to put this as simple as possible. Break of structure is one of the easiest confluences to understand. So hopefully you guys get it. And also, guys, get fucking excited. This is like our first like real deal, real spiel.
I'm excited.
Like, get fucking excited. This is our first thing that we can actually like start fucking applying and getting. Like my eyes are lighting up. I feel like I'm on fucking Molly and cocaine right now, and I'm just like,
whoa there,
I'm
pal.
just so fired up to teach you guys this shit. So please be as fired up as me and take some fucking notes. Break of structure. It's when the current trend gets disrespected.
He was going to say take a line.
If we're in an uptrend, higher highs and higher lows. How would we hypothetically break this trend? How would we disrespect this trend?
Higher
we
highs
would just
and
quite
higher
simply
lows.
stop
There's a
making
lower
higher
high.
highs and higher lows, right?
There's a lower high.
So, in order for us to no longer have higher highs and higher lows, what has to happen?
Lower high.
We have to make a lower low, right?
No.
And a potential lower high. Now,
What?
a break of structure to the downside,
That's not a lower low. That's a higher
which is
low.
what I just marked out,
But it
is
is a lower
when
high.
we are in an uptrend. And the most recent low, make sure you take notes of this because this is important. As much as I love messing around, okay?
Yep.
I want you guys to be
Let me
the
rewind this real quick,
downside,
'cause I was talking.
which is what I just marked out, is when we are in an uptrend. And the most recent low, make sure you take notes of this because this is important. As much as I love messing around, okay? I want you guys to be successful. A break of structure to the downtrend, to the downside, is when we are in an uptrend and the most recent low, emphasis on most recent, when the most recent low that was created gets closed underneath by a candle, okay? And we are going to instant low, emphasis on most recent, break of structure to the downtrend, to the downside, is when we are in an uptrend and the most recent low, emphasis on most recent, when the most recent low that was created gets closed underneath by a candle, okay? And we are going to show examples of this, but a break of structure to the downside is when we are in an uptrend currently, making higher highs and higher lows, and we get a candle closure. So in our case, and on my chart, it would have to be a big, girthy, wide, black candle.
He knows what he's doing.
Candle that closes underneath the low, okay? And that's how we can identify a break of structure to the downside. Now, break of structure to the upside, what is it? Well, it's when we are in a downtrend, so making lower lows and lower highs. Now, how do we break a downtrend? Simple. We make a higher high instead of another lower high. Boom, the trend is broken off of this. Downtrend. Simple. We make a higher high instead of another lower high. Boom, the trend is broken off of this. How do we officially break structure on this? When we get a big, wide, long, lanky, in my case, blue candlestick closure over what? The most recent high. Is long, lanky, in my case, blue candlestick closure over what? The most recent high. So how do we break structure to the upside? When we are in a downtrend, we get a candle closure above the most recent high, okay? The most recent high that was made within the trend, we get a candle closure above it. That's how we identify break of structure. So now that you guys know how to identify break of structure, at least on my Picasso drawings and on lines, let's actually get into the...
All right, so the break of structure is when the current trend gets disrespected. How do you detect it? If you're doing if it's going uptrend and the most recent low gets closed underneath by a candle, underneath the previous low. Fuck, that doesn't make sense. Uptrend and the most recent low gets closed by a candle? I'm gonna have to go back and read. Uptrend and the most recent low gets closed above. So if you're going uptrend, underneath underneath recent low. Yeah, I fucked up that sentence. Hopefully I'm able to remember. But underneath recent low by a candle.
Difficult part, which is actually identifying it on the chart. So there are two things that I want you guys to pay attention to when we go onto the chart. The first thing that you guys need to do is boom, immediately identify the current trend that we are in. So we already taught you guys how to do that, right? We're just looking for higher highs and higher lows. Okay, cool. Once we do that, what are we going to be looking for? We're going to be looking for breaks of structure. Okay, so see when that current trend that we are in gets disrespected. Okay, so those are the two things that I want you guys to look out for when we get into this. Okay, tell me what you see. Yeah, it's a lot harder when we pull up the charts and we got candlestick wicks everywhere and we don't know what price is doing. Don't worry, I'm going to break down pretty much all of this for you. Okay, so this is actually a really good example that we have right here. We'll just go ahead and start here. We'll start within this area, okay? We have a low, then we have a high. Move up, then a move down, the highest point of those two candles. Following that, what happens? This candle closes above this high. Cool. So we'll start within this area, okay? We have a low, then we have a high. Move up, then a move down, the highest point of those two candles. Following that, what happens? This candle closes above this high. Cool. So prior to this, we were in a downtrend. Why? High, low, lower high, lower low, lower high, lower low. Okay. And then after that lower high and lower low got made, what did we do? We broke structure to the upside. How? Because we closed above the most recent high that was made in the downtrend. Above the most recent high.
I think that kind of makes
because
sense now.
We closed above the most recent high that was made in the downtrend. I know it's confusing, but stay with me now.
Yeah.
Now what trend are we in? After we break structure on this candle, because we closed above the most recent high, something I want you guys to also notice. Look, so we have a high right here, right? And then a new high gets formed right here. Does this high get broken above when this comes up and gets made? No. So what do we have to classify as the new high now? Right here. Whenever we're waiting for a break of structure to the upside, we're just constantly monitoring
God, my
highs.
brain is just fucking...
Whenever we're waiting for a break of structure to the downside, what are we doing? We're just constantly monitoring the new lows that get made. So in this case, we're looking for a break of structure to the upside. Why? Because we're in a current downtrend. And how do we look and wait for a break of structure to the upside? We just monitor the most recent highs that get made. So this was the most recent high that got made, and then boom, we break structure. So now we're in an uptrend. And we can see that. Why? We have a high. This low is a higher low compared to this one. And then boom, we go up and we make a higher high. Now, this is where it gets tricky, and this is where it's going to get very confusing for some of you guys. Okay. See this candlestick right here?
Yes. Damn, that shit is small.
We have a low right here and a low right here, but this low, this move down, then a move up, goes underneath both of these lows. Is this a break of structure?
No.
No. And I know that is very hard for your brain to contemplate right now because you're like, wait, but
it's gotta close.
There was a high and then this went underneath two lows and made a lower low. Yes, you're right. It did make a lower low, but how do we identify a break of structure?
It closes.
And in this case, girthy one, right now that we're in an uptrend, we're looking for breaks of structure to the downside. What do we need? We need this low. Because this is the most recent low. We actually don't care about this one. This is the most recent low. What do we need to happen to this low? We need this to be a full candlestick. We need this to be a full candlestick. We need a candle closure. So look, see the difference between this high. What did this candle do to it? It closed above it. The candle close is above this high. Did this candle right here break structure? No, because it was only a wick above the high. But this candle, it closed above. So when we look at this right here, this candlestick, where's the most recent low? What is our current trend? We're currently in an uptrend. For us to break structure to the downside, we would need this candle closure to be underneath this low. So for that reason, we are still in an uptrend. And price respects that and goes and makes a new
next couple
higher high.
Bro, that's just confusing as fuck.
And then look what happens again. Now, this is the most recent low.
Yeah.
Even though we technically did make a lower low, we are still in an uptrend because we haven't broken structure yet.
Oh, never
and look
mind.
below. And then look what happens
Wait
again.
a minute,
now,
chat, he's cooking.
This is the most recent
Hold
low.
on, go back.
Reason we are still in an uptrend. And price respects that and goes and makes a new higher high. And then look what happens again. Now,
So
this is the most recent low.
Okay. No, wait.
Even though we technically did make a lower low.
Lower low, higher high.
We are still in an uptrend because we haven't broken structure
new
yet.
low, new high.
And look what price does again. Price goes down. Do we get a closure underneath the most recent low within the... We are still in an uptrend because we haven't broken structure to the downside yet. No, we do not break structure to the downside. And then where does price go? It rips up. I know that was very confusing, but I needed to show you guys those examples of no breaks of structure. So again, if we're in an uptrend of...
So this one was a new break of structure, no? No, wait, you gotta go to most recent highs.
No breaks of structure. So again, if we're in an uptrend and this is our most recent low and we see a candlestick wick go underneath this most recent low, is that a break of structure? No, it is not. Okay, it is not a break of structure to the downside. The only time that it's a break of structure to the downside is when we get a candle closure underneath the most recent low. So let's show an example of break of structure to the downside now. Within this, we are in an uptrend. Why and how do we know that? Well, it's fucking going up, okay? I mean, I could mark out the highs and lows if we needed to. Look, move up, then a move down, high. Move down, then move up, low. Higher, high, higher, low, higher, high. Okay, cool. This is actually another good example of this, actually. Look, we can see this candlestick, boom. It actually goes underneath this low, but it doesn't close underneath it. And then what happens? Price maintains that uptrend. It actually goes up to create a higher high. So now, where's the most recent low that we're looking for in this uptrend to get broken? This is the most recent low. Where do we break structure? I want you to pause this video, look at it. Where do we end up breaking structure to the downside? What candlestick?
Right here, this
we break structure to the downside on this candle right here. Why? Because look at the candle close. This candle closes underneath the most recent low that was made within an uptrend. So now what are we in? After we get a candle closure underneath this low, we are in a downtrend.
I appreciate
y'all
for tuning in. Hopefully
now
you
we
guys
have
learn
a lower
alongside
low.
with me.
Now we have a lower high. Now we are
Unless you
literally
guys already know
forming
anything
as
about
we
trading,
speak
let me know
a
anything
lower
in the
low.
chat. Let me know what you know.
Now that you guys know how to identify breaks of structure, this isn't the magic pill. This is not going to turn you into a profitable trader.
Come on, man.
But now that we know how to identify trends, and now that we know how to identify highs and lows, and now that we know how to identify breaks of structure, we are in an insanely good spot. And get fucking ready. Because literally in like the next couple minutes, you guys are going to learn shit that's going to blow your fucking mind. And honestly, it blew my mind when I learned about it or when I discovered it on the charts. And I'm going to help you guys I'm going to try and blow you guys. I want to blow you guys and blow your guys' minds.
What?
So let's go do that. Okay.
Hey, this guy's kind of sus, no? Wait,
See, I did that. Let's go do that.
What am
I? See, I did that. Okay. So let's go do that. Okay. Your guys' minds, blow you guys. You guys blow I'm going to try and blow you guys. So let's go do that. Okay. See, I did that. I blew you guys. Get it? I told you I was gonna. Okay. All right, let's learn about liquidity. This is by far the most important concept.
You cracked me up, man.
This is the GOAT of concepts, the greatest of all time of concepts, and then the concept following this This is like Michael Jordan versus LeBron debate. Liquidity is LeBron, and then fair value gaps and imbalances is like Michael Jordan. Why? Because liquidity is better than fair value gaps and imbalances. LeBron is better than Jordan. But before we get all the old heads riled up, MJ was better. Let me just teach you guys how to trade this shit first.
I don't think LeBron
Okay,
was
so
better either.
what even
Kobe,
is
man,
liquidity?
Kobe.
Liquidity
Kobe's
is
the GOAT.
pending orders, or okay, we'll do this for the retards. Just resting orders above highs and below lows. That's all it is. That's all liquidity is. Liquidity is resting orders above highs and below lows. And you're probably thinking, hey, I know what a high and low is. That's right, Timmy. You do know what a high and low is. So you know where liquidity is. Liquidity is above highs and below lows. Consistently, without a doubt, every single time, liquidity is above highs and below lows. So if there's a high in the market,
What the fuck does
what
that
is
mean?
there above it? Liquidity. If there's a low in the market, what's there below it? Liquidity. More importantly, resting orders. Now, when I explain liquidity, I like to explain it like this. We as retail traders, so first of all, if you guys don't know how the market moves, okay, the market moves off of market makers, not us. So we are retail traders. We are making the tiniest, smallest transactions compared to funds and the people that are actually moving the market, okay? So keep that in mind, okay? So the people that are moving the market moves based off of algorithms, and algorithms, in order for them to fulfill orders, they need orders to go in the other direction. Okay, so just like how I explained in that little ecom class example of buying the share of Apple stock, right? If I want to buy a share of the S&P 500, or if I want to buy a share of the NASDAQ, somebody has to be willing to sell it to me. This is equally true at scale. So let's say I want to buy $1 billion worth of S&P 500, or $1 billion worth of S&P shares. Let's say I want to buy $1 billion worth of NASDAQ shares, okay? Somebody has to be willing to sell that to me. So again, how do these transactions take place? Well, I know this is kind of going to be counteractive to what I just taught you about uptrends and downtrends, but just bear with me for now. Just like how I taught you guys that when we're in an uptrend, we make higher highs and higher lows, okay? Market makers know that. In a downtrend, we make lower lows and lower highs. So when we when we're in a downtrend and we move past a low, what's going to be expected? We're expected to go lower, right? And then what's going to happen when we push past this low? Well, people are going to sell. People are going to get into short positions underneath this low, right? Okay, and market's going to move lower, right? Because that's what they think is going to happen. In an uptrend, when we push past a high in an uptrend, what do people often do? They often place a buy position. Why? Because they think, hey, the market's going to move higher. Why? Because we're in an uptrend. When market moves past a high, what do people do above the high? They press buy. There's buy orders above these highs, okay? Because what are they expecting price to do? They're expecting price to go higher. Now, this is true to an extent until the market wants to change directions. How can the market have the ability to change directions? What gives it the ability to change directions? Through liquidity. And what is liquidity? Resting orders above highs and lows. Something else that we need to understand about uptrends and downtrends is when we're in an uptrend, making higher highs and higher lows, we have to understand when we're making this move down, even though we're in an uptrend, not every single person in the market sees this as an uptrend. I know this might get confusing, but you got to bear with me. Not everybody sees this as an uptrend. So they see this move down, and what are some people doing? They are selling. So they're entering into short positions here. And where are they putting their stop loss? They're putting their stop loss above these highs. So when they enter into a sell position right here, they essentially are committing to buying back their position at a higher price up here if price pushes up there. So there are pending buy orders up here. Not only that, but when this high gets pushed above, the people who thought it was an uptrend in the first place are pressing buy. Why? Because they say, hey, we're in an uptrend. I think price is going to go higher. So what lies above these highs here? a massive amount of buy orders. Now, same thing in a downtrend highs here.
Made a little face right here.
Massive amount of buy orders. Now, same thing in a downtrend. In a downtrend, what lies underneath these lows? Well, for the people that think and know that it's a downtrend, when this low gets pushed past, what are they going to be doing? They're going to be pressing sell. Okay, they're going to be pressing sell because they're like, hey, we're in a downtrend. Price is going to go lower. On top of that, the people who saw this mini retracement up, the people who saw this move up to make the lower high, they might have thought, hey, we're going to go into an uptrend. So if they bought on this move up, where is their stop loss going to be? Right. Where are they going to have to sell their shares at a lower price to lose their trade? Underneath these lows. So not only do we have people who are buying in the market down here getting stopped out and having to sell their buy positions at a lower price underneath these lows, but we also have people who are trying to sell the market once these lows get pushed underneath. So we have a ton of sell orders underneath lows within the market. So we have a ton of buy orders above highs, and we have a ton of sell orders underneath lows. Now let's think back to that example that I was just telling you guys about. What happens when a big player or the algorithm needs to fill a massive amount of orders to change the current direction or to change the trend of the current market? It needs orders to fill. Where is it going to find those orders? Above highs and below lows, because there are buy orders above highs and there's sell orders below lows. So you're probably saying, okay, so when we go underneath a low, what do? Do we press sell? No. Or I mean, it's not that simple. It's not just we push past a low and you press a button. If it were that easy, everybody would be rich. This is just a step in the right direction. But when we push underneath lows, what does the market have the opportunity? Emphasis on the word opportunity, because it doesn't have to. It can continue this downtrend, right? But every time it moves underneath one of these lows, it does have the opportunity to what? Structure. Sweep this liquidity, break structure. Use these sell orders to do what? Fill their massive amount of buy orders to change the direction of the market. Yep. And that is what liquidity is, and that is what a liquidity sweep is. A liquidity sweep, which is by far the most important confluence that I'm going to teach you, is when the market manipulates a high or a low within the current trend to fill their massive amounts of orders to change the direction of the trend, to cause a reversal. So in this case, we're in an uptrend. We move past a high. The people that thought it was an uptrend, what are they doing? They're pressing buy. The people who thought it was going to go into a downtrend, who had a sell position in, what happens to them? They get stopped out. They have to buy back their sell positions at a higher price, causing them to lose money. But then what does that give the market the ability to do? Fill their sell positions to cause price to actually go down. Does that make sense? Now you're probably saying, well, how do I identify? Well, how do I know what high and what low is important and which one price is going to reverse off of? Don't worry, I'm going to teach you that. But the first thing that I want you to do is to think that I'm not a crazy lunatic and show you guys this on the charts. I'll show you a really awesome and hilarious liquidity sweep, or at least it's funny to me. Remember that super scary, horrible sickness that was going around in the year 2020?
COVID.
Was it really a super dangerous, super scary illness? Or was it just
a liquidity sweep?
A liquidity sweep and a catalyst to be able to fill all the rich people's orders to make them
rich,
10 times richer than they already are?
Holy shit.
What did price do? And keep in mind, there's liquidity on every single time frame. There are highs and lows on every single time frame. These confluences show up on every single time frame.
So what? What
did price do during the 2 months that everybody was freaking out? It pushed underneath 1, 2, and 3 lows. And what did that give the market makers and the richest people in the world the opportunity to do?
Buy.
To press buy. And to fill their orders and to cause the market to go up.
Huh.
So not only can we see that on a high time frame with a news catalyst, but we can also see it on low time frames. Actually, we see it on a daily basis. Look at this right here. This was an example that I just showed you guys for examples of not breaks of structure. We see big move down. We push underneath one low. We push underneath two lows. And then following that, what does market do? Boom, it rips up. We can see this on even lower time frames. Market right here, it's in a downtrend. Imagine if you are at this current price. You see a chart that looks like this. I know it seems easy in hindsight, but it is difficult when you get into the actual markets. We see price that looks like this. Just realistically, any normal person looking at this chart is probably like, wow, this looks like shit. It's going to go lower. It's exactly what they want you to think. Let's watch this candle form. Boom. We come down, we take out this low, we get everybody to press sell. We get everybody who bought on this mini move up to exit their buy positions. And then what does that give the market makers and the rich people the opportunity to do? Make a shit ton of money and causes the market to go up. This happens on the 1 minute time frame. It happens on the 15-minute time frame. It happens on the 5-minute time frame. It happens on every single time frame. Liquidity sweeps are what move the market. Liquidity and imbalances is what moves the market. So this is a very, very important concept that I want to teach you guys. I mean, matter of fact, we actually saw a huge high time frame liquidity sweep today. Look at this. High time frame low. Another high time frame low. What did we just do today? We just swept out this low, swept out this low, and we swept out this low. And now look at what price is doing. This is the magic pill. This is what is going to help you turn profitable. But I'm telling you right now, it is not as easy as just saying, oh, look, there's a high, I'm going to press sell. Why? Because we have to think back to those trends, right? We already showed that the market moves in higher highs and higher lows. So if we press sell at every single high and press buy at after every single low that gets pushed past, we are going to be losing and we're going to be a horrible trader. So now that we know how, first thing that I want you guys to do, pause this video and go onto your trading view and just identify a time where market has moved underneath a low and then changed direction. Just identify 5 liquidity sweeps in each direction. So at least
This is hard. Okay. So here's what I'm thinking. What is this? What is this? What is this? What's this? I don't know. But here's, fuck. The fuck? You see? Fuck. What's this? Damn. Alright, so we're in the 1 minute mark. Let's go to 45-minute mark. Reset chart view. Where the fuck is this one? I don't know. Alright, reset chart view. I don't know, man. Okay, so it's going up right now. It hasn't come back down here. This shit's just been going up. Oh, it's just today. Damn, that shit went up today, bro. Wait, no, actually each of these is 45 minutes. So each of these is an hour. Holy shit, this is hard. These little things are throwing me off. Is that the weekend? Yeah, Friday, Monday. This is one? This is one? It's going down. And doof! That's gotta be one right here. 100. Cause look, it's going down, down. Lower lows, lower highs, lower lows. Break a structure a little bit, but let's see if it really broke the structure, right? So right here, I would say this is kind of stagnant too, but let's say we're looking at it in this perspective, because this is the start of the new week. So if we go here and we got low, high, low, high, another low, high. So right here, it's just literally staying stagnant. Here's another high, another low. So clearly it's going up, right? High, low, high. No, wait, this isn't a high. This is a high. New high, low, and then high, and then you keep going, I don't know, man. Cause now I'm just thinking of break of structure. Let's say we got this low. We got this low. We got what, that low. We also got what, this low. Oh, we gotta look back to over here. Thought I had it, but I was thinking it's right here. Cause let's say it's this low. This went up. It's a high. Then this is a low. So wait, has it not? Oh shit! Now they're staying. Yeah, it hasn't reached this because that it just keeps going up. Like the SPY, it's just going up. I put all of these, not knowing what the fuck I'm doing, man. I'm sorry, TJR, I failed you. Teach me more of your ways.
At least you guys know that I'm not crazy and you guys can see and identify these things. So you guys know that it's real.
I believe you, homie.
But it's not as easy as just pressing buy when we move underneath a low and pressing sell when we move above a high. We're going to get way more in depth about understanding what highs are important, what lows are important, and what times to be looking for these highs and lows are important. Okay, but the first thing that we just need to do is just understand that, hey, this thing works and it's real and it's how the market fills its orders to move in the direction that it wants to go. Call me crazy, but I just showed you multiple examples. I just showed you a global, worldwide example of how the US manipulated not only you guys, but literally every single person in the entire world to be fearful to literally fill their orders. That should piss you off.
I'm
that
mad.
they used you. You are
That's
getting
when I would have
used.
made a lot of money.
We are no longer going to be the ones that are getting used by the market.
We're using
by
the
the
market.
people that are rich and wealthy. We are going to start trading with them. We
Yeah.
are going to start trading like them. We are going to start trading with them.
It's a whole
And
lot of
eventually,
knowledge to
we
take
will
in
become
right
one
now.
of them. Hopefully not as rude and as much of a dick. But again, these liquidity sweeps, they are what move the market. I mean, again, we can see literally on a weekly time frame, boom, huge leg down. What do? We take out this low. Then following that, what does the market do? It moves up. It's not a lie. It is real, and it is how the market moves. So now that we know how to identify liquidity, I want to put a pin in this. And now, before we put like how to put all of these things together. I know your brain is like, okay, I know what a trend is. I know what a high and low is. Like, when can I actually understand where the market's going to go? When can I understand this, Tyler? Or TJR, sorry. Well, legal name dropped. I know. Everybody already knows my name. But when can I figure out where the market's going to go? Just be patient. I want to teach you guys every single confluence first. So I taught you break of structure. I just taught you liquidity sweeps. I'm now going to teach you guys about imbalances and fair value gaps. Again, liquidity and imbalances make the market move the way that it does. Okay, after I teach you guys all of these confluences and I feel confident that you guys know these confluences and what they are and how they move the market, from there, that's when we're going to put it all together, because I find that's best. Like, if you guys are able to just like pause this video and be like, bet, I just want to know and identify liquidity sweeps and where they are in the market. Go, fuck it. Like, I have homework for you. Literally go on every single time frame that you have up here and try and find a liquidity sweep on every single time frame where price moves above a high and then changes direction and breaks structure to the downside. That's what I want you guys to do. Find 5 examples of when price moved above a high just to sweep liquidity and then caused a break of structure to the downside. I also want you guys to find 5 examples of when price moved underneath a low and then caused a break of structure to the upside to change direction. Because not only does that reinforce that liquidity sweeps are real, but that also helps on both confluences. And how are liquidity sweeps confirmed? Well, when we push underneath a low and then we break structure to the upside, it's like, well, yeah, orders were filled. We just broke structure. We just changed the fucking trend.
So
how else would that happen with orders being filled, with liquidity being filled? So now that we understand that, let's get into imbalances. It's pretty much like the opposite of liquidity almost, but it's in the greatest of all time in terms of confluences and is huge for us to understand where we want the market to go on a daily basis. And again, I know you're like, how are we going to put this all together? Trust in me. You guys have trusted me this far. It's been like 2 hours already. We're thugging it out. I'm making this video for you guys.
We need 3 more hours. Hold on. Give me a break, man. Give me a break. Woo! Oh my god, man. I need a stretch or something. That's a whole lot of knowledge, bro. Right. That's a whole lot of knowledge. Hopefully we're able to take it all in, learn something today, and maybe trade with some fake money later on this week. That's the plan. Oh, we really have 3 more hours. Fuck, TJR, 5-hour video.
Like, this is literally everything that you guys need to know. This is fucking everything. I'm telling you guys right now, this is literally fucking every single thing that you guys need to know. And y'all are chilling after this one fucking video. This one video is literally teaching you A to fucking Z how to become a profitable trader. I'm doing it all, bro. I'm doing it all, and I'm trying my best, all right? So, let's get into fair value gaps now. Imbalances or fair value gaps, they're the same thing. Often abbreviated as FVGs. What are they? I know you can't use the definition in the name in the definition, but I often do this. It's imbalanced price action that needs to be balanced out via a retrace. So imbalances / fair value gaps. I know I'm using the word in the definition, but deal with it. I'm not a grammar person. It's imbalanced price action that needs to be balanced out via a retrace. First of all, if you guys don't know what a retrace is, when we're in an uptrend, it's the down move. So the down move is called a retrace. So this is called a retrace. Why do we call it a retrace? Because when the overall trend is, when we're in an uptrend, it's the down move. So the down move is called a retrace. So this is called a retrace. Why do we call it a retrace? Because when the overall trend is up, it's just retracing so it can go higher. Retracing the up move so that price downside. Okay, so we have boom, retrace up, move down, retrace, move down, retrace, extension, retrace, extension. These moves up are retraces within a downtrend. Moves up are retraces in a downtrend, moves down are retraces in an uptrend. Okay, so all that imbalances and fair value gaps are a price range that is imbalanced, that needs to be balanced out via a retrace. So I try not to classify things as candlestick patterns because I'm sure a lot of you guys have probably gone through like some other day traders thing and they're talking about head and shoulders pattern. They're talking about double top, double bottom, candlestick pattern. I'm not gonna say it's bullshit. I will say that when I tried to trade that way, it never fucking worked. But maybe I was the issue back then. But coincidentally, when I started trading like this, I was no longer the issue and it started working. Take that for what you will. So I'm not a believer in candlestick patterns. However, I am a believer in reading and identifying balanced, imbalanced price action where orders are lacking on the chart, where orders are resting on the chart to cause price to move the way that it does. And that's exactly what an imbalance is. And luckily for us, we can use candlestick patterns to demonstrate these. So let's just jump straight into this shit. What does an imbalance look like? What does a fair value gap look like? It's a 3 candlestick pattern. This is one candlestick. This is the second candlestick. And this is the third candlestick. Let me make this an up candle instead of a down candle. There we go. Okay, so this is an imbalance. This is imbalanced price action from this candlestick wick to this candlestick wick. Why is this imbalanced price action? Why is this price action right here imbalanced? I'll tell you. So the first candlestick that was made, we opened right here. At some point in time, we had sell orders that pushed us down here. At some point in time, we had buy orders that pushed us up here. But we also had sell orders that had to come in to move price down and then have price close right here. This following candlestick, it's a big bullish candlestick, huge move up, right? We had the highest point that it got to was up here. The lowest point that it got to was down here. Sell orders up here ended up causing price to push down. The third candlestick opened right here. At some point in time, we had buy orders move it all the way up here. Sell orders moved it down, causing it to close here. We also, at some point in time, had sell orders push price down here. So throughout all of this, I know that was a lot of sounded like a lot, but
2 hours into a 5-hour video.
2 hours and you're annotating.
In this price,
Huh?
You're annotating too?
Yeah, you gotta take notes. See, I'm learning. Learning.
What?
I don't know. Just kidding.
You just writing it down?
Yeah, you gotta find higher highs and lower lows. Higher highs and higher lows. That's how you know it's going up. Lower highs and lower lows, you know it's going down. Confluence is a reason to get into a trade. There's a couple different kinds of confluences. So far, I've learned about break of structure. So it's higher highs, higher lows until there's a lower high, and then it breaks the structure. And then same thing, the opposite. Liquidity, resting orders above highs and below lows. So people waiting to buy or waiting to sell. And right now I'm learning about imbalances, fair value gap.
Locking.
Locking in, bro. Locking in. You gotta lock in, fool.
What you mean, bro?
I'm just kidding.
I'm just waiting
Waiting for what?
till it hits 440, bro.
Oh, for soccer?
Price range, what are we lacking?
Trying to lock
We're
in
lacking
soccer.
sell orders. Why? Because if we think about the first candlestick, at some point in time, we had buy orders that push price up, and then sell orders move price down from here. So boom, sell orders stopped here. And then we see, boom, huge bullish candlestick. Then the next candle, okay, we see price open. At some point in time, price had sell orders that pushed price down to here, but the sell orders stopped here. So where is there a lack of sell orders? Right here. Within this price range, and this is how we identify bullish fair value gaps, from the top of the first candlestick's wick to the bottom of the third candlestick's wick. That is how we identify a bullish fair value gap. Should have made this green. So there's a lack of sell orders within here. When or if price comes down and retraces into this imbalanced price action, it's imbalanced because there's a lack of sell orders. So when we get the sell orders to come down to balance it out, and when we fill this gap and we get buy orders within here, what is likely going to happen? Because there's a lack of sell orders, once we hit it with some buy orders in this price range where there's a lack of sell orders, what is that going to cause price to do? Go higher. This is a bullish fair value gap. Now, let me show you an example of what a bullish fair value gap is not. Well, what happens if this candlestick's wick goes all the way down here and this candlestick wick goes up here? What happens if the candlestick wicks overlap? Well, then there's no imbalance. There's no imbalanced price action. There's no imbalanced price action. Why? Because sell orders were here. At some point in time, price moved up here and sell orders had to push price down. And also on this third candlestick, at some point in time, sell orders had to push price down to here. So these wicks overlap. So there's no bullish fair value gap within here. This, on the other hand, there's a lack of sell orders. This is a bullish fair value gap. Now, what's a bearish fair value gap? Well, also, something that I want you guys to keep in mind. There's two things that I want you guys to keep in mind. The only candlestick color that matters is the middle candlestick. So obviously, if it's a bullish fair value gap, this candlestick is going to be green, or in my case, blue. If it's a bearish fair value gap, the candlestick color is going to be red, or in my case, black. The first and the third candlestick color doesn't matter. This candlestick could be a bearish candlestick as long as these candlestick wicks don't overlap. There is an imbalanced price. Another thing that I want you guys to know about fair value gaps is they are just like penises. No, I am not joking. A fair value gap is the equivalent to a penis, a male follicle, a male limb. Let me explain. Size does not matter. We as gay traders, as day traders, we do not care about the size. All that we care about is what lies within. We care about the personality. We yearn to learn within. Limb. Let me explain. Size does not matter. We as gay traders, as day traders, we do not care about the size. All that we care about is what lies within. We care about the personality. We yearn to learn more, to balance out that imbalance, regardless of the size. No matter what size it is, we want it, we need it, I need it, okay? Plain and fucking simple. A fair value gap is a dick. Literally as simple as that. So a bearish fair value gap, how do we find it? From the first candle's bottom wick to the third candle's top wick. Again, it doesn't matter if this candlestick is black, blue, Chinese, or Indian. We don't see color on the first and the third candlestick. The middle candlestick, we're racist as fuck. If it's black, it's bearish, or at least on my, if it's red, then it's bearish on your guys' chart. If it's black, It's bearish on my chart. There's no racial correlation there. I love everybody from everywhere. It's just for the example purposes. It helps us visualize this a lot better. The penis correlation, the race correlation, it's all for your own benefit. Hey, guess what? You're going to remember this now. I'm telling you this. I promise you won't remember this shit when old fucking geezer is like, yeah, when you get the imbalance price action and then the enigma goes up and wants to balance out the fractal and the enigma for the power of 3 and no, we don't give a shit about that. We're talking about blacks, we're talking about whites, we're talking about Indians, we're talking about Asians, we're talking about dick, we're talking about gay, we're talking about everything. Why?
Hold on, what the fuck is going on, man?
Because it's what keeps us locked in. It's how we remember it. I hope you write down in your notes, a fair value gap is like a dick. Female day traders, don't get mad at me. Don't get mad at me, girls. You know it's true. Period. Period. A fair value gap just like that dick. Period. That size doesn't matter. It's just what lies beneath the sheets, baby. It's just what can make that shit work. It's just the motion of the ocean. It don't matter about that dick, baby. It just matter about what's inside you. Period. If you got that dog, I'm gonna take it raw. That's enough for now, okay? So a bearish fair value gap is from the first candlestick's wick down to the third candlestick's wick up. So what is there a lack of within here? There's a lack of buy orders. When price moves up into that fair value gap, where there's a lack of buy orders, and it balances out price action, and it fills its sell orders within there, since there's a lack of buy orders, what is that going to cause price to do? Go down and continue the trend. A fair value gap and an imbalance is a confluence that I like to call a continuation confluence. Write that down. A fair value gap is a continuation confluence, okay? Fair value gaps are continuation confluences. Why? Because they continue the trend that we are currently in. Break of structure, okay, let me just go ahead and label these really quick. I might as well make this. Reversal confluences, liquidity sweeps, confirmation confluences, break of structures, and inverse fair value gaps. We haven't got to inverse fair value gaps yet. Don't worry about it. But I just want this so you guys can screenshot it or write it down in your notes. Continuation, confluences, fair value gaps, order blocks, we're getting to those next, breaker blocks, and equilibrium. And another confirmation confluence is an SMT.
Reversal.
And we'll get to all of these. We're going to talk about every single one of these, okay? So we already learned about liquidity sweeps. We just learned about confirmation. We just learned about fair value gaps. Now, why are liquidity sweeps reversal confluences? Because they are the signs of a trend reversal. Why are break of structures confirmation confluences? Because they confirm the break of structure. They confirm the break of the trend. They confirm the reversal. And you're going to see when I give you guys this strategy, we go from reversal confluence to confirmation confluence to continuation confluence to execution. We go from liquidity sweep to break of structure or inverse fair value gap or SMT down to fair value gap, order block, breaker block, or equilibrium to execution. Because it's all 3 steps of a full trend reversal. We need a sign of reversal via liquidity sweep. We need confirmation of the trend break and the new trend shift via break of structure or inverse fair value gap or SMT, which we're yet to get to. And then we need proof and actual belief in this new change of structure and in this new break of trend that we just had by showing what continuation of the trend via what fair value gaps. So just take a picture of that for now. We'll get back to that. But now I want to show you guys fair value gaps on charts. Just like liquidity sweeps, fair value gaps are on every single time frame. And this is something about fair value gaps. Going back to dicks, okay? Fair value gaps are just like dicks. You don't want to fuck every single dick. Okay, there's only some dicks that you want. Same thing with liquidity sweeps, okay? You only want to liquidate some people and you want to leave some people unliquidated. You don't know what's going on in their the junk in their trunk, okay? We don't want to get down in there. We don't know the past, we don't know their history. It's the same thing with fair value gaps and liquidity sweeps, okay? And I'm going to show and tell you guys how to identify the correct fair value gaps, how to identify the right liquidity sweeps. But right now, I just want you guys to understand that these things work. So we're going to show examples of this on the chart. And then from there, we'll put a pin in it just like we did with liquidity sweeps. Something else that I want you guys to keep in mind, fair value gaps are nothing without context. So I can go out here and I can mark out all these fair value gaps, but they don't mean shit without the right context of price. So I can mark out this is a bearish fair value gap right here. Why didn't price move down off of it? Well, because we don't have the right context to be using this right now. We had another bearish fair value gap right here. Price actually did fill this one and then it did move down off of it. Okay, it's all about the context. I can show a whole bunch of fair value gaps that, like this bearish fair value gap right here. Okay, first let's do this a little bit slower because I know I'm speed running through these, but okay, first candlesticks, bearish fair value gap. How do we mark it out? From the bottom of the first candlestick's wick to the top of the third candlestick's wick. What is it? A 3 candlestick pattern. 1, 2, 3. We just look for the gaps. The easiest way to identify it is like, oh look, there's 3 candlesticks and there's a gap between them. That must be a fair value gap. Look at this right here. Look, there's 3 candlesticks and there's a gap between them. That must be what? A fair value gap. And then you can see and just look at the candlestick color in between them. Boom, it's a bullish fair value gap. 3 candlesticks with a gap between them. Oh, that's a bullish fair value gap. 3 candlesticks with a gap between them. Oh, that's a bearish fair value gap. Very easy to identify. There's a fair value gap here. There's a fair value gap here. There's fair value gaps all over the place. Now, what I want you guys to do, pause the video, go to your chart right now, identify 5 bearish fair value gaps, identify 5 bullish fair value gaps. What I want to show you guys on top of this lesson is show you guys how they get respected. Because fair value gaps can get disrespected and they can also get respected. And this is kind of going to lead us into inverse fair value gaps right after this explanation. So this is a good one. Right here, we have a bearish fair value gap. Why is it a bearish fair value gap? Because the third candle is a move down. Okay, we have 1 candle, 2 candle, 3 candle. We take the bottom wick of the first candle to the top wick of the third candle, and we just, boom, we draw a little box on it. This fair value gap, it got filled, right? But then we got a candlestick closure above it. So what did we do to this fair value gap right here? We disrespected it. This fair value gap is no longer valid. Okay? For a fair value gap to get respected, we have to fill it without getting a candlestick closure above it, and then get a candlestick closure down. It doesn't matter if the candlestick closes down within the fair value gap. It just matters that we come in, fill it, and then the next candlestick. Or it doesn't have to be the direct next candlestick. It could be 1 candle up, 2 candle up, 3 candle up. As long as it doesn't close above the fair value gap, and as long as we get a candle down out of it, boom, that's it being respected. As long as it's in the right context, price should move down.
So I'm pretty sure inverse would be like you come in here, go back down, and go back up.
Same thing on a bullish fair value gap. Let me find an example. This is a good example of a current one that's about to get disrespected as long as price close underneath it. But look, we have a bullish fair value gap right here. How do I know that? First wick, I mean, just look, right? There's a gap between the 3 candles. The first candle's top wick, the third candle's bottom wick. This is the gap.
It closes.
Price right now is currently disrespecting it. We'll know for a fact if it gets disrespected once this candle. Doesn't mean that, okay, again, just because price is down here like this right now, doesn't mean that, okay, this fair value gap is said and done. No, it can leave, as long as price closes in here, if it leaves a long ass wick like this, that's okay. I'm fine with that. Okay, and I'll show you an example of that, of a fair value gap getting filled with a long ass wick. So what is this? This is a bearish fair value gap. And again, we get 1 candle close, 2 candle close, 3, like whatever. There's a whole bunch of candle closures within this, but as long as the candle doesn't close above, get a bearish candle closure, confirming that sell orders have been filled, and then price ends up moving down. Also, I just want to point something out to you guys. Look at this. So you can see the magic start to work. Liquidity sweep. We were within an uptrend. Break of structure to the downside on this black candle, followed by fair value gap getting filled, price moves down. Anyways, now that we know, let me show you 1 or 2 more examples. Price comes up into the bearish fair value gap, it accumulates for a little bit, and then boom, goes down. What I want you guys to remember is 4 fair value gaps. When you guys start trading these, you guys are going to think these are magic pill, and you guys are going to start marking them out, and then you guys are going to start pressing buy and sell every time a bearish or bullish fair value gap gets filled. Well, guess what? That's how you lose. You lose by trading these confluences just by themselves. You win by trading them together in a good strategical manner that is optimal for efficient price movement. And I'm going to teach you guys that. We just have to get through I know, like day trading is a hard skill, so we have to get through these steps first. This is a good example. So right here, it goes above this bear. I mean, assuming that the next hour isn't just this huge candle that ends up turning up, but assuming that this candle closes like this bearish fair value gap is valid. It hasn't been disrespected because it's just like a wick. It's just a wick. So just like break of structure, if it's a wick, we don't care, okay? But a candle closure above the fair value gap, we do care. Now, that leads me into what inverse fair value gaps are. An inverse fair value gap is...
And that is where I'm going to call it for today. It's been an hour and a half, 2 hours and a half, probably longer that I've been streaming. But I feel like I've learned for sure more than I knew coming into this. It makes more sense. Obviously, there's still a lot to learn. We're halfway through the video. He's still got a couple more confluences to teach us. But I feel like that's enough for today. I'll probably be watching some videos, watching other people trade, see if I can, point out the things that I've learned and trying to, do a little bit more. But tomorrow I am gonna hop on live as well, doing the same thing, learning the rest of this video, and the rest of the week I probably will start trading with fake money. So make sure you hit that follow button if you're watching on Kick. If you guys are watching afterwards, make sure you hit that subscribe button. And yeah, I hope you guys enjoyed. I appreciate you guys for watching, and I'll catch you guys next time tomorrow. Laters.